How is your examination preparation going? Have you done the RTP for January 2026 examination? If not, here's your go-to video. And in this video, I've not just discussed the answers, I've not just the topics to the extent given in the RTP, but I've gone little beyond the question. I've told you all the concepts that will come around the question to just not let you do RTP, but also do those topics around the RTP to help you do slightly better in the upcoming examinations. If you have not done RTP, this is the video in which I will not solve and you will not watch the video, but you can take your paper, pen, calculator, sit with me, and as I solve the entire RTP, you can solve it with me, and trust me, at the end of this video, you would feel much better and much confident with regard to your accounting preparation for your upcoming examinations. I wish you all the success in the examination. I wish you everything that you deserve. In fact, an exemption in accounts and a rank in CA Foundation. Let me know in the comments later if in case this examination and this result goes in your favor. We'll be hoping to see you all in your CA intermediate at the end of this RTP discussion and at the end of your CA Foundation examination. Why waste time? Grab your paper, grab your pen, keep that calculator next to you, and let's start with RTP discussion for January 2026 examination of CA Foundation Accounting. Let's now discuss question number 1, true or false, from our RTP January 2026 for CA Foundation Accounting. The very first question is the concept of conservatism when applied to balance sheet results in understatement of assets. Slightly a twisted question. Firstly, conservatism convention is applied to P&L, basically expense and incomes. It says that we need to account for all expected expenses and losses, but not for expected incomes and gains. If this is applied to balance sheet, assets will be understated and liabilities will be overstated, but that is if you are not prudent. The objective of conservatism is not to understate assets. The objective of conservatism is to show the assets at right value, but accounting for expenses by anticipating and not accounting for incomes by anticipating. So you can comfortably write the answer as false, not quoting conservatism as a reason, but you would have to quote the word prudence. If in case we are prudent, then assets will not be understated in spite of conservatism. Then Messrs. Raj, Yog and company runs a cafe. Congratulations to them. Hope you serve really good coffee. They renovated some of the old cabins. Because of this renovation, some space was made free and number of cabins increased from 25 to 28. Total expenditure is 50,000. It was treated as revenue expenditure. They're trying to bring in a case study kind of scenario in a true or false question, but this is quite simple. You understand that number of cabins increased from 25 to 28. So the utility has increased. Future economic benefit can be seen from this, and the amount of cost that will be incurred on renovation is quite huge. Material amount of money is gone in, and you won't do this renovation every year or every month or every 2 years. So this expenditure of 50,000 incurred on renovation, it is not revenue expenditure, it is capital. We've learned this, how to segregate some expenditure into capital and revenue based on the nature of the business, basis of the expenditure, purpose for which it is incurred, recoverability, revenue generation capability, and materiality. In this case, that increase in the number of cabin numbers will give us future economic benefit. Amount incurred is material, and we won't do this expense again and again. So I will comfortably call this expenditure as capital expense and not revenue expense. So the answer is false. Bank reconciliation statement is prepared to arrive at bank balance. No, false. Bank reconciliation statement is prepared to identify the errors, if any, between passbook and cash book, so that we can rectify those errors in my cash book. And if the error is in passbook, I can only request them to change, but I can't make entries in banker's books. I'll repeat. The objective of preparation of bank reconciliation statement is not to find bank balance, or it is not to find cash balance. Cash balance, bank balance, both are known. We compare them to see differences, to check if any of those differences are arising because of errors. If there are errors, we will rectify them in our cash book. I hope you got it. So the answer is false. The provision for bad debts is debited to sundry debtors account. No. Provision for bad debts is not debited to sundry debtors account. provision for bad debts is debited to P&L, and it's a provision to be recorded in the balance sheet on the liability side. However, as a matter of presentation, I will show this provision for doubtful debts as a reduction from my debtors. But there is no journal entry between provision and debtors. It's a liability created by debiting P&L, and it is shown in the balance sheet as a reduction from debtors. It is provision created for the anticipated non-recovery from some of our customers. Depreciation is a non-cash expense. Finally, we have one for which the answer is true. Depreciation is a non-cash expense and does not result in any cash outflow. 100% correct. Question number E, the answer is true. Depreciation is a non-cash expenditure. It doesn't result in any outflow of cash. Discount at the time of retirement of a bill is gain to the drawee. Okay. Discount at the time of retirement. What do you mean by retirement? I have sold the goods, you have purchased the goods, I have drawn a bill, you have accepted the bill. I become drawer and seller, you become buyer and drawee. Let's say you are supposed to pay me money after 2 months. After 1 month, you have the money ready, you offer to pay the money to me. Let's say you were supposed to pay the money after 2 months, and at the end of 1 month you have money and you're willing to pay. I was supposed to collect money from you after 2 months. If I'm collecting the money from you after 1 month, I'm happy to collect because I'm receiving the money early. And this is called retirement. Retirement is where the bill is settled before the maturity date. Maturity and due is in the next month. You're paying the money to me this month. That early payment is retirement, and I'm happy about it. I offer you discount. To me, discount is expense. I am drawer and seller. To you, drawee, discount is received. You receive discount on retirement because you are a good person. Such a good person you are. You're paying the money to me well before the maturity date. I give you discount. To me, it's expense. To you, it's income. You are drawee. You are buyer. To you, it is gain. Answer is true. Next, provision for discount on creditors is often not provided keeping in mind principle of conservatism. If I owe money to somebody and if I supposed to pay them money, I won't create provision for discount. Like I am thinking or I am expecting that they will offer me discount. No. When they offer me discount, I will book income. Before they offer me discount, I won't anticipate the discount and then create provision because the reason is conservatism. Such anticipation of discount to be received is against conservatism. I cannot account for anticipated income. On the other hand, if one of the customer is supposed to pay me money, if I expect him not to pay, if I expect to give discount to him in the future, I can create provision for discount because conservatism says account for anticipated expenses. That is a discount that you will offer to your customer, but don't account for anticipated incomes before you receive it. If my creditor actually gives me discount, then I'll record. If I anticipate it, I'll not record. Conservatism. Answer is true. Then firm will receive surrender value of JLP on the death of a partner. Sorry, no. It's a good news that the partner has died because the JLP will mature and will receive full policy amount and not surrender value. Joint life policy is a policy taken on the lives of all the partners jointly by the firm. In the case of death of a partner, we receive policy amount, full value. If in case of admission, retirement, dissolution of firm or dissolution of partnership, wherein we surrender the policy and we don't claim full money, we'll receive only surrender value. So on death, full value. On retirement, on dissolution, only surrender value. So here they're telling on JLP surrender, we receive, firm will receive surrender value on death. No, on death we receive full value. On death we receive full value or policy amount. Answer is false. Then we have I, where a non-profit organization separate trading activity, profit and loss shall be transferred to income and expenditure at the time of consolidation. Where a non-profit organization separate trading activity, the profit or loss from the trading shall be transferred to income and expenditure at the time of consolidation. Yeah, all the income and expenditure of not-for-profit organization, partly trading activities done, will be transferred to income and expenditure only. True. Fixed charge generally covers all the assets including the future one. Oh, fixed charge is specific asset mentioned. Now let's say I've given you money as loan or you've given me debentures. Basically, I've given you loan. I, in the debenture certificate, ask you to mention your plant and machinery specifically. Meaning, if in case you don't pay me my interest, don't redeem my debentures, I can take your plant and machinery. You can't stop me. If I ask you to mention that name of plant and machinery in the debenture certificate, I have a fixed charge on your asset. If fixed charge is made, it's on a specific asset. It's not on random asset and future assets. If it is floating charge, then it covers all the assets, including the future one. If it is fixed charge, it's on the specific asset. So, J, true or false questions, the answer is false. We'll now discuss question number 2, theoretical framework based question, a theory based question from our Jan 2026 RTP. Discuss the limitations which must be kept in mind while evaluating financial statements. Financial statements, whatever we prepare, does not consider qualitative characteristics. It only considers quantitative characteristics. It might be deceiving because it has taken into consideration all the historical data. The price level changes have not been considered, inflation has not been considered, and it doesn't take into consideration the fact that accounting is biased. Different policies will result in different profits and different valuations. And another important point one to note is there can be window dressing within the financial statements. So keep in mind that financial information which is given in the financial statements ignores qualitative information. It can be biased. It is based on picking a lot of accounting policies. It can be window dressed and all of this. And those are the drawbacks also of accounting. Then distinguish between going concern and cost concept. Very simple. Going concern is the concept which is a fundamental accounting assumption, which says that whenever we do accounting, whenever we do business, it is done with the assumption that the organization neither has an intention nor a necessity to close down its operations in the near future. It always has the intention to continue the business for foreseeable future. Like if I have an asset today, I don't have an intention to sell that asset and close the business today. My intention is to use this asset till the end. I'll continue to do business next year. 31st of March, you don't expect me to sell all the assets, pay all the liabilities, and next year start afresh. That is the reason we prepare balance sheet, where we write balance of all the assets and liabilities and keep my capital also there, because I will wake up tomorrow and start my business, continue my business again, and not sell my business. So the fundamental accounting assumption of going concerns is that organization neither has an intention nor a necessity to close down its operations in the near future, or it intends to continue its business for foreseeable future. Cost concept says that all assets should be recorded at the historical cost. That is the cost at which I purchased by giving the money. And historical cost concept should be followed whenever the organization is going concern. When the organization is not a going concern, when you expect not to go further and do the business for next few years, then you need not follow cost concept. You can start following realization concept. You will start valuing your assets not at historical cost, but at realizable value. Let's now solve question number 3A from our January 2026 RTP. This question 3A is on the topic of journal entries. This is chapter 2 accounting process, unit 1 journal entries. Let's begin. You are required to pass necessary accounting entries, journal entries in the books of Mahesh. So we are representing Mahesh and we are writing entries on behalf of Mr. Mahesh. See the first transaction. A check amounting to rupees 24,000 from Shankar is received in full settlement of his account of rupees 25,000. So the amount receivable from Shankar is 25,000, and against 25,000 receivable, we have received a check which is of 24. So receivable is 25, received is 24. We are still supposed to receive 1,000 from Shankar. In the question, it's told that it is in full settlement, meaning balance of 1,000 rupees will no longer be received, and that balance of 1,000 will become discount allowed. We are Mahesh, we are receiving check from Shankar, we give discount to Shankar. So the entry will be, when we receive the check, I will debit my bank account to the extent of 24, and Shankar is my asset because he is giving me the money. Asset is reducing, I will credit my asset Shankar by 25. 1,000 rupees which I am not receiving but I am still writing off will be recorded as discount allowed. So the journal entry is bank account debit, discount allowed account debit to Shankar. Let's go to the next journal entry. Withdrawn for personal use goods of sale price 9,000 which are of cost 6,000 and cash is 3,000. Whenever the goods are issued other than by way of sale, we cannot credit sale account. We will be crediting purchase account to represent the goods that are going out. And whenever the goods are being withdrawn for personal use, it is drawings, and drawings will decrease capital. Whenever the capital decreases, capital account should be debited. In fact, we'll be debiting drawings account. The journal entry will be drawings account debit to purchase. This drawings account debit to purchase is for the goods purchased, and this entry should be passed at cost price. However, cash is also withdrawn to the extent of 3. So my drawings is not 9,000 sale price of inventory. My drawings will be 6,000, which is cost. It is not 9, it is 6,000 cost. Along with that, I'll add cash of 3,000, which is withdrawn. That makes my drawings 9,000. So drawings, which is decreasing the capital, is 6 plus 3, 9,000. Out of that, 3,000 is cash going out, so you should credit cash. 6,000 is inventory decreasing, so we will credit purchases by 6,000. The journal entry that we would have to pass will be drawings account debit to the extent of 9 and credit my purchase account representing 6,000 inventory flowing out and 3,000 credit cash account for the cash flowing out. So this is the journal entry for goods and cash withdrawn for personal use. Let's go to third one. Third one, goods costing rupees 3,000 are distributed as free samples. See, this is again, sale is not happening, but the inventory is going out. Whenever there is flowing out of inventory other than by way of sale, we cannot credit sale. Should be always crediting purchase. When the goods are given away as free sample, when the goods are withdrawn for personal use, when the goods are used for construction of an asset, in all of these cases, we will not be crediting sales. In fact, we will be crediting purchase. An important point to note when we credit purchase is, whenever we credit purchase, it should be at cost price. It cannot be at selling price. Whenever we credit inventory, it should be at cost price. That is purchase account credit at cost price, not at sale price or invoice price. Let's write an entry to this. Free samples given away as advertisement expenditure. So the journal entry will be advertisement expense account debit to purchase account. This is to the extent of 3,000 rupees. Understood? Let's go to the fourth one. Fourth one is received commission of 15,000. Commission is income. Income has to be credited. And when I receive commission, it is received in the form of cash. So cash account has to be debited. Commission account has to be credited. Journal entry will be cash account debit to commission account. Point to be noted is half of this does not relate to current year. Out of 15,000, half, which is 7,500, it doesn't relate to current year. It is received in advance for the next year. So when I debit my cash account for 15,000 rupees, I will credit commission account for 7,500. Balance 7,500, which is not my current year income, will not be credited to commission account, but it is income received in advance to be credited to commission received in advance, pre-received income account. So the journal entry will be bank account or cash account debit 15 to commission income 7,500. Another 7,500 is credited to advance commission account. Alternatively, you can split this entry into two. You can write cash account debit to commission income 15,000, 15,000, and then write commission income account debit 7,500 to advance commission account 7,500. If you combine those two entries into one, it will end up being cash account debit 15, credit commission income by 7,500, and balance 7,500 credit to advance commission. Anyways, it's absolutely the same. Let's see the next one. Fifth one, income tax liability of proprietor. This is not the income tax of the business. This is income tax of the proprietor. It is proprietor's personal expense, which is to be paid by proprietor personally out of his personal cash. But proprietor's personal cash is not used to pay this. It is paid out of the petty cash of the business. So it is personal expense paid by the proprietor using petty cash of the business. If the petty cash of the business is used to pay proprietor's personal expense, this is drawings. But it is shown to you like it is income tax paid. Ignore the word income tax there. Write the entry as if 18,500 is withdrawn by proprietor for his personal use. Journal entry will be drawings account debit to cash. Drawings debit because it's reducing your capital to the extent of 18,500. Credit your petty cash because petty cash balance is reducing by 18,500. This is the journal entry that you would have to pass whenever cash of the business in the form of petty cash is used to pay income tax expense of the proprietor. Let's now go to sixth one. Sixth one, purchase of goods from Sunny of the list price 15,000. He allowed 10% trade discount. See, let's say 15,000 is the purchase of the goods. Journal entry is purchase account debit, not to cash, purchase account debit to Sunny. But just before we buy it from Sunny, we ask Sunny, Sunny, can you please offer us discount? Sunny actually offered us discount of 10%. So on 15,000, when we've been allowed 10% discount, don't you think we pay 1,500 less than 15,000? We haven't paid. Don't you think we should pay 1,500 less than 15,000? So out of 15,000, if we've been allowed 10% discount, we have to actually pay 13,500 to Sunny. So our creditors, Sunny, is only 13,500. And the inventory purchase should also be recorded not at 15, but at 13,500. So the journal entry is purchase account debit 13,500 to Sunny 13,500. We should not record discount 1,500 separately because this is trade discount. It should be recorded as adjustment from our purchase value, but not as a separate income. Purchase account debit to Sunny 13,500. Continuation of this, 200 rupees discount was also given for quick payment. I'm supposed to pay Sunny 13,500. I paid him 13,500, but because I paid it to him quickly, before the end of the credit period, Sunny offered me discount of 200. When Sunny offers me discount of 200, that 200 rupees discount what Sunny offers is expense to Sunny and it is income to me. I won't pay 13,500. I'll pay 13,300. But my liability towards Sunny will decrease by 13,500. Liability decrease, debit will be 13,500. Bank account credit or cash account credit to the extent paid 13,300. 200 what I don't have to pay, but still my liability would decrease, would become my discount received income. So the journal entry is Sunny account debit 13,500 to discount received 200 to cash account 13,300. And this marks the end of all the 6 questions which is there on 3A, which is journal entry based question. Taking this slightly forward, let's now solve question 3B, which is on capital or revenue expenditure. Following expenses or following payments have been basically made. We need to classify them into whether it is capital payment or capital receipt or revenue payment or revenue receipt. Before we classify this 1, 2, 3, 4, 5 items, let me tell you why do we do this. We do this because the treatment of capital payments is much different from how you treat revenue payments. Revenue payments are expenses which will end up in P&L account and trading account, whereas capital payments are assets which will end up in balance sheet. And the basis for categorizing any payment as capital or revenue is nature of business, purpose for which it is incurred, revenue generation capability of that expense, materiality, as well as recoverability. Based on these 5 factors, we'll decide whether it is capital or it is revenue. Let's begin. Legal fees on acquisition of land. Whenever you incur expenditure for buying a land and the documents, whatever you got of the land, you run it through a lawyer before you buy to ensure whether the papers are correct or not. Such expenditure will not be written to P&L account. It will be added to the cost of the land. So this is capital payment and not revenue payment. Similarly, if we completely repaint an existing building, that repainting that we do will not increase the size of the building. That will not increase the efficiency or useful life of the building. It will only make the building look good. Moreover, painting is not done one in 20 years or one in 30 years. It's recurring expenditure. You might end up painting the building every year or every 2 years. So because you do it very often, it is not capital payment, it is revenue payment. Recurring amount involved is immaterial. It will not give you long-term benefit. 3 reasons. Repainting of delivery van. Exactly same reason what we discussed for repainting of existing building. Revenue payment. What is the reason? Very simple. When you paint the van, the size of the van will not increase. Van's useful life or efficiency will not increase. You paint it so that it looks good. And painting is not done once in 15-20 years. You might end up painting it very often. So repainting, because it is immaterial amount involved, it will not increase the revenue generation capability. It will not ensure future economic benefit from the asset. This repainting of the delivery van expenditure ends up being revenue payment. Then drainage for a new piece of water extraction equipment. Basically, we put one borewell to extract the water from underground. When we extract that water is very hard, can't be used. We put one water filter. In this water filter, hard water goes through and comes out as usable water. Some amount of water will be thrown out as wastage. That water has to go. You cannot let it spread all over the floor. So we make one drainage. Drainage is properly built as a construction. You might put a pipe, you might dig the ground, you might put cement, you might put brick. It's a proper construction done. And this is going to give you long-term benefit. Material money amount involved is also material. So purpose is long term. It will give you future economic benefit. That will become a capital payment. It is almost like a new asset constructed. Lastly, we have carriage cost for replacement part of a piece of machinery. This is a slightly tricky one. Whenever you have an existing machinery and in that machinery one small part is stopped working, you buy a new part to replace. Firstly, this part, whatever you're buying to replace in the machinery, what is this part? Is this part very important? Is this part expenditure capitalized by adding it to the cost of the asset, or are we writing this part to P&L? That's the question. If we're writing this part to P&L, it is like ignorable repair expenditure. Then transportation cost also will be written to P&L. That is revenue. If the part that is replaced in the asset is revenue, then the transportation or carriage cost is also revenue. However, if the part is of capital in nature and to be added to the cost of the asset, then the transportation cost also will be added to the cost of the asset. They have not told that replacing that part will increase the efficiency of the asset. Because they have not mentioned that it will increase the efficiency, I will treat that repair part as well as the carriage expenditure on that repair part both as revenue payment. Alternative assumption is valid, but they have not told that it will increase the efficiency. So revenue payment would be the ideal answer. Let's do question number 4A from our January 2026 RTP. This question 4A is from accounting process chapters, but it is from the unit of subsidiary books. They want us to do sales book. Interesting. Easy one. Let's start. Sales book of Mr. Kabir of Almora for January 2025. Important point to note before you start any question on sales book. Remember, what we record in sales book is sale of inventory, not sale of assets. Important checkpoint. In order to record it in sales book, it should be sale of inventory. It should not be sale of asset. Point number 2. It should be sale of inventory on credit. It should not be for cash. If it is on credit and if it is of inventory, you record it in sales book. If it is goods sold for cash or if it is sold on credit but it is asset, we will not record it in sales book. 2 checkpoints. Number 1, inventory. Number 2, credit. Start. January 5th. What happened on January 5th? Sold to Messrs. ABC 10 pieces of chairs at rupees 5,000 each, less trade discount of 5%. So I have sold goods to ABC. They have not mentioned cash, so I'll assume it to be credit. Because we've learned, no, unless they mention cash, it's not cash. And they mention the name of the party, then it will become credit. So I've sold it to ABC, 10 chairs into 5,000, 50,000 rupees, but that's not the sale amount. I've offered them 5% discount. So in my sales book, I would write 5th of Jan is the date of transaction. Messrs. ABC, 10 pieces of chairs into 5,000 rupees for chair. This comes to be 50,000 rupees. From this, I'll deduct trade discount of 5%, which is 2,500. From 50,000, if I deduct 2,500, it ends up being 47,500 rupees. This is the sale entry. Let's go to the next one. On January 12th, we sold to Messrs. PQR 25 pieces of tables at rupees 2,000 each, less trade discount of 10%. Again, I am a furniture shop. When I sell table, it is inventory sold. They have not mentioned cash, so it is credit, and I'm offering discount of 10%. So I would write on January 12th, Messrs. PQR. I'll write 25 pieces of table into rupees 2,000 per table, which comes to 50,000. From this, I'll deduct trade discount at 10%, 5,000. I'll end up getting 45,000 rupees as the credit sale entry in our sales. After this, let's go to third one. January 18th, sold goods to Messrs. MTB. That's the name of our creditor to whom I've sold. I've sold 5 pieces of recliner chairs. This is also furniture. And each chair is sold at rupees 11,000. 5 into 11, 55,000 will become sale. But wait, there is trade discount of 10%. We will deduct trade discount. But what's very important is payment is received through check. If I receive the payment instantly through check, this is goods sold for cash. Sir, but check is received. Whether you receive check or you receive cash, it is goods sold for cash. Instantly, if you receive money, it is cash sale. Not necessarily it has to be for cash. This is not credit sale. Meaning settlement is made immediate. settlement in cash is not postponed to another date. Because the settlement in cash is immediate, this entry will be recorded in cash book, and in my sales book, I would make no entry. Why is it that I make no entry against this January 18th transaction? Because the inventory is sold. 5 chairs, 11,000, 10% trade discount. But check is received instantly. Because the settlement is instant, this would not appear in sales book. Instead, this transaction would go to cash book. After January 18th, January 28th, we sold goods to LMN. What did we sell? 50 pieces of cupboards at rupees 10,000 each. Each cupboard is sold for 10,000 and we sold 50 pieces. Do 50 into 10,000. That will come to 5 lakh rupees. That is a sale, and I've offered discount of 20%. So I'll do 50 into 10,000, 5 lakh minus 20%. That would be the sale. In my sales book, I would write January 28th, Messrs. LMN, 50 cupboards into 10,000 per cupboard. That becomes 5 lakh. I will deduct trade discount at 20%, which comes to be 1 lakh. From 5 lakh, if I deduct 1 lakh rupees as trade discount, 4 lakh rupees will be the sale made to LMN. Is there any more transactions? No. Just simply take the total 47,500 plus 45 plus 4 lakh, which becomes 4 lakh 92,500 is the total sales made on credit in the month of January by Messrs. Kabir. Let's now start with question 4B from our January 2026 RTP. This question is on chapter 2 accounting process last unit, which deals with rectification of errors. Let's begin. Mr. Lalit was unable to agree the trial balance of last year. So this transaction or these errors have been happening, basically happened in the previous year. So errors which has happened in the last year have been identified this year. If you identify the previous year errors in the current year, the rectification can be done in the current year. But remember, this is stage 3 rectification. Rectification after final accounts. When you rectify the errors after final accounts, your rectification entry cannot involve items affecting profit and loss account. Your rectification entry cannot involve items affecting profit and loss account. Meaning, rectification entry cannot involve purchase account, sales account, purchase return account, sales return account, expense account, and income account. These accounts cannot be written in rectification entry. These have to be replaced with profit and loss adjustment account. That's one point. Another point to notice, at the end of the year, after you rectify all the errors, you close profit and loss adjustment account by transfer to capital account. Should close your profit and loss adjustment account by transferring the entire balance to capital account. Is it compulsory? 100% compulsory. If you don't write this entry, your marks will be cut. So please ensure that you write this closing entry also. Next, and wrote off the difference to P&L. This is the first mistake that they did. Whenever the trial balance doesn't tally, you should write the difference to suspense, but they by mistake written it to P&L. Whenever they write the difference in trial balance to P&L, when we rectify, whenever we use suspense, suspense is not getting cleared. Suspense is getting created. So after you rectify all the errors, at the end, suspense account also should be closed by transfer to capital. Because in the past, if they had credited or debited suspense when trial balance didn't tally, every time we pass rectification entry, suspense will get cleared. But if they didn't use suspense, if they wrote P&L, amount what should have been otherwise been there in suspense has now affected profit, profit has affected capital, capital is wrong. So to rectify the capital, whenever we pass rectification entry using suspense, the total amount that is there in suspense will be transferred to capital and the capital will become corrected. So in this case, you need to remember 3 important points before you solve the problem. Point number 1, because this is rectification after final accounts, in the rectification entry, you have to ensure that you don't use purchase, sale, purchase return, sales return, expense, income account. All nominal accounts cannot be used. It will be replaced with P&L adjustment. Point number 1. Point number 2, whenever you finish rectifying all the entries, you need to close profit and loss adjustment account by transferring the balance to capital account. Point number 2. Point number 3, when the trial balance did not tally, they should have written the difference to suspense, but they've written to P&L, because of which capital has gone wrong. So now we need to pass all the journal entries for rectifying at the end, identifying the total balance in suspense, and total balance in suspense also should be transferred to capital. These are the three important points to be noted when we're doing rectification for this. And they told on verifying the old books by a chartered accountant, next year the following mistakes were found. Let's rectify one after the other. First one, purchase account was undercast by 16. Purchase is expense. Basically, it's undercast. They've reduced the purchase. What do? Increase it. How do I record my purchases? Debit it. So journal entry is very simple. Purchase account debit to suspense. It is one-sided error. Error is only in purchase. Don't assume that there is error in creditors. Have they mentioned that there is error in creditors? No. So the error is only in purchase. Journal entry is purchase account debit to suspense. But we all know we can't debit purchase account. Why? This is error identified after final accounts. So instead of purchase, I will debit P&L adjustment. I'll anyways credit my suspense as usual. This is the journal entry for rectifying. Purchases was undercast, so I will increase. Entry is purchase to suspense. Purchase is later replaced with P&L adjustment. Got it? Next, sale of goods to Messrs. Rashmi for rupees 5,000 was omitted to be recorded. You sold goods to Rashmi, you forgotten to record it. What to do now? Record that sale entry. What is the journal entry for sale? Debtor account debit to sale. Here the journal entry is Rashmi account debit to sales. Rashmi account, okay, but sales account cannot be credited. Can I credit sales? I would have credited in another case. Because this is rectification of error after final accounts, I cannot credit sales. Rashmi account debit 5. Sales I cannot credit 5. So in the place of sales, what should I be writing? I should replace 5,000 sales with profit and loss adjustment account. I'll replace it with profit and loss adjustment account. So this is sales entry which was previously omitted, now recorded. Let's go to third one. Receipt of cash from Mr. Ashok. Stop here. First think, what is the entry that you should have passed when you receive cash from Ashok? Cash account debit to Ashok account. The journal entry is cash account debit to Ashok. This was posted to the account of Mr. Anubhav. Instead of crediting Ashok, they've wrongly credited Anubhav. Should you credit Anubhav? No. What have you done? You wrongly credited Anubhav. Because Anubhav is wrongly credited, now you should replace it by debiting Anubhav. Once you debit Anubhav, Anubhav account is corrected. But when you received cash from Ashok, Ashok was supposed to be credited. Ashok is not credited. Now you credit Ashok. Anubhav was wrongly credited. To reverse the credit, Anubhav should be debited. Journal entry will be Anubhav account debit to Ashok account 1,200, 1,200. And in this case, in this journal entry, there is no nominal account involved. You don't have to replace neither Anubhav nor Ashok with P&L adjustment. Entry will remain as Anubhav to Ashok. Anubhav, who was wrongly credited, is now debited. Ashok, who was supposed to be credited, is now credited. End of the story. Entry is Anubhav account debit to Ashok account 1,200, 1,200. Next, let's go to the fourth one. Amount of rupees 4,167 of sales was wrongly posted as 4,617. What is the problem? Sales is 4,167. It's been wrongly recorded as 4,617. We recorded sales by a higher amount. What should I do? I should reduce the sales. Sales, when you credit, it will increase. To decrease it, you should debit it. So I should debit my sales account. I would have to debit sales. But I know it, you know it, we all know it. Sales account should not be debited by 450. That is 4,617 is the wrong amount. 4,167 is the correct amount. It is increased by 450. To decrease it, I should debit. But I cannot use sales in rectification after final accounts. I'll replace sales account with P&L adjustment 450. Credit will be suspense. There is no error in debtors account. The problem is only with sales. So only sales I'll reduce 450. After this fourth one, let's go to fifth one. There is repairs to machinery. How much is repairs to machinery? 6,100 was debited to machines. Repair is expenditure, revenue in nature. It should have been debited to PL. Instead, incorrectly they've added it to the cost of the machine. Revenue expenditure incorrectly treated as capital expenditure. So principal error which needs to be rectified. Machinery was wrongly debited by 6,100. I should reduce the machinery by crediting machinery by 6,100. Then what is the correct debit? Repair expense is the correct debit. 6,100 being repair expenditure should have been debited to repairs, but have not debited to repairs. because repair expenditure of 6,100 is not debited to repairs, I will debit now. Machinery which was wrongly debited by 6,100, I will credit. Repairs which was supposed to be debited but not debited, we will now debit. Entry will be repair account debit 6,100 to machinery account 6,100. But did the bulb glow? We cannot debit repairs. Why? Very simple. It is error rectified after final accounts. Can't use nominal account like repairs. Nominal account will be replaced with profit and loss adjustment account. Entry will be repairs account debit 6,100, which is now replaced with P&L adjustment account 6,100 to machinery account 6,100. This is the entry for fifth one. Got it? Then let's see what's the sixth one. Sixth one is the last one. Yeah. A credit purchase of goods from Mr. David for rupees 3,000 is entered as sale. I purchased goods from David. Journal entry should have been purchase account debit to David. What have I done? I have wrongly recorded as sales. I have written David to sales. David to sales should not be written, but it is written. I should reverse it. In order to reverse it, I should debit sales, credit David. Purchase to David is not written. To record it, I should record purchase account debit. I should record David account credit. I'll repeat. It is actually purchase, for which the journal entry is purchase account debit to David. But I've wrongly written it as David account debit to sales. David to sales is wrong entry. Reverse it. Debit sales, credit David. Next, purchase is not recorded, no? So debit purchase, credit David. Journal entry will be sales which is incorrectly credited to be reversed, debit sales. Purchase which is supposed to be debited, not debited, debit purchase. Credit David by double the amount, 6,000. So entry is purchase account debit, sales account debit to David. Purchase account debit, sales account debit to David. 3, 3 and then 6. But we all know it, we cannot use purchase account and sales account in rectification entry in this question because here error is being rectified after final accounts. So I'll replace sales and purchase with profit and loss adjustment account 6,000. So the journal entry will become profit and loss adjustment account debit 6,000 to David account 6,000 being purchase of goods wrongly entered as sales, now rectified. By this, I have covered all the 6 errors. Now, they're asking us to suggest rectification entries, which we did. Only first point is covered in so far what we've done. Other 2 points you have to remember. We've replaced nominal accounts with P&L adjustment, but we have to close P&L adjustment account by transfer to capital. Let's do that. P&L adjustment account debit 16. Take that in your calculator. P&L adjustment account credit 5. 16 minus 5. It will become 11. It will become 11. Then you again debit P&L adjustment account by 450 plus 450. And then you'll do again plus 6,100. Then you'll do plus 6,000. There are too many debits. Total of the debit minus that one credit item is how much? 16,000 minus 5,000 plus 450 plus 6,100 plus 6,000. What do we have? 23,550. That is the balance that is left in P&L adjustment as positive. I will credit it and debit my capital account. Whose capital account? The name of the person who's doing the business is Lalit. So it will be debited to Lalit's capital account. This is a closing entry. This has to be written. Mandatory. P&L adjustment account balance closed by transfer to capital. If you have not done P&L adjustment, that would have affected your PL. It would have bothered your profit, which is not correct. So you have to route it through P&L adjustment into capital account. First point done. Second one. This last entry is actually not needed if they would have written the difference in trial balance to suspense. But when the trial balance did not tally last year, they've incorrectly written it to profit and loss. So you'd have to close suspense account also, exactly like how we close P&L and transfer it to capital. Let's do it. First entry we have suspense credit 16,000. Take minus 16. Next entry we don't have suspense. Third entry we don't have suspense. Fourth entry we have suspense 450. So minus 16,000 minus 450. It becomes minus 16,450. Then we don't have suspense here. We don't have suspense here. That's it. Minus 16,450. We have credit of 16,450. It will be closed by debiting 16,450 to suspense account. Credit Lalit's capital account 16,450. This is how you do rectification of errors for errors identified after final accounts, where previously the difference in trial balance was incorrectly transferred to P&L. Let's now solve question number 5 from our January 2026 RTP of CA Foundation. This question is from your favorite chapter, Bank Reconciliation Statement. But what they've asked is not something that you like. They've not asked only Bank Reconciliation Statement. They've asked you to do amended cash book and then follow it up with cash flow statement. I think so. Yeah. Arun, have a look at the question. According to the cash book of Arun, the balance is 8,90,000. This is balance as per cash book. This is as on 30th of June 2025. They've investigated. They've identified 1, 2, 3, 4, 5, 6, 7 items. You are required to first make the appropriate adjustment in cash book. Basically, adjusted cash book or amended cash book is being required. In adjusted cash book or amended cash book, you write errors identified in cash book. You will not write checks issued but not cleared, checks deposited but not cleared. You don't write them. You will write everything else. Payment recorded in passbook only, or auto payment recorded in passbook only, or cash collected directly by the bank recorded in passbook only, interest recorded in passbook only, bank charges recorded in passbook only. All of these transactions which are not recorded in cash book are all errors in cash book. Errors of omission, errors of complete omission. These have to be recorded in cash book. Once you record them in the cash book, then the cash book balance is adjusted to find the correct balance. Once we find the corrected cash book balance, then that will be taken forward into our bank reconciliation statement. There we write these checks issued but not cleared, checks deposited but not cleared, and prepare our BRS to find balance as per past. That's what they've asked. Okay. Don't ever try to finish amended cash book first and then start BRS. Start simultaneously. Do amended cash book as well as BRS simultaneously. Keep it open. In your amended cash book, start with balance as per cash book, 8,90,000 given in the question. Write all the errors rectification here. Whatever you find as the balance carried down here, balance as per amended cash book, that will become the opening balance in BRS, and then you'll end up finding balance as per passbook here. Can we begin with 6 adjustments? The first one, checks amounting to rupees 1,20,000 issued to creditors have not been presented for payment till date. This is not an error. If it is not an error, if it is a timing difference, I'll mark it in green. It's a timing difference. This difference is arising only because of time. By time, this will get cured. Is it an error to be rectified? No. Should it go to amended cash book? No. It should go to bank reconciliation statement. The payment is being made, so the entry is happened in cash book. Cash book balance is decreased. Because the present check is not presented by the creditor, passbook balance is not decreased. Cash book balance has decreased, passbook balance has not decreased. We're making changes in cash book. We have to add this 1,20,000. In my cash book, I would add check issued but not cleared 1,20,000. Next adjustment, checks paid into bank 2,21,000, out of which only checks of 1,10,000 are collected by the bank up to 30th June. Again, timing difference. I have deposited 2,21,000 rupees worth of checks, because of which my cash book balance has gone up by 2,21,000. But 1,10,000 worth of checks have been cleared. Passbook has increased only by 1,10,000. Cash book has gone up by 221. Passbook has gone up by 1,10,000. There is still difference between them. How much? 1,01,000. 1,01,000 is the value of the checks which is being deposited and recorded in the cash book but not yet cleared in the passbook. So the cash book balance has increased, but the passbook balance is not. We're making changes in cash book. I have to reduce 1,01,000. I would write here less. Checks deposited but not cleared, 1,11,000. Actually 1,11,000. Sorry. 2,21,000 minus 1,10,000 is 1,11,000. These two are basically the genuine timing differences which should happen in BRS. Let's see out of the other three if there are any timing difference. If there are no timing differences, if they're all errors, if they're all non-timing differences, all of them will go to amended cash book. Dividend of rupees 8,000 and rent amounting to rupees 1,20,000 received by the bank in the passbook but not recorded in cash book. See, banker has collected 8,000 rupees dividend and 1,20,000 rent on my behalf. When the banker has collected it on my behalf, banker has recorded it in passbook and passbook balance has gone up. I have to record now in cash book. It's my income. I have not recorded. This is clearly error of omission. Passbook balance has gone up. Cash book balance has not gone up. Where are we making changes? Cash book. What should I do? Add. How much should I add? 1,20,000 as well as 8. But it is not added in BRS. It is receipt not recorded. cash book balance has to be rectified by adding, meaning debiting on the receipt side, I mean to say on the debit side of amended cash book. In the amended cash book, on the debit I'll write dividend 8,000, rent 1,20,000, which is received but not recorded in cash book, which makes it error of complete omission, now rectified. What's after this dividend and rent? Then I have with me insurance premium of rupees 5,400. It is being paid up to 31st December but not entered in cash book. I have given standing instructions to banker and banker has made the payment of 5,400. Unfortunately, I have not recorded this 5,400 in my cash book. That's an error. Cash book entry is not made, passbook has gone down. Making changes in cash book, we should record it as minus. But this is not timing difference. It will not go to BRS. It will go to amended cash book. In my cash book, I had to record payment, but I have not recorded, which I'll record now. In my cash book, I'll record by insurance premium 5,400 rupees, which is not recorded, is now recorded. What's after this 5,400? Then fifth one, payment side of the cash book has been undercast by 1,000. I made payment of 1,000, but I have not recorded it. I have undercasted it, meaning I have recorded it as 0. It's like payment of 1,000 not recorded, or payment is 10,000, but I have recorded it as 9,000. If I pay 10 but record 9, I have reduced the payment by 1,000. That's what has happened here. It's an error in cash book. I should have recorded that 1,000. I have not recorded. I should record now. What should I record? Payment. Simple. On the payment side, payment which was undercast will be now recorded. Then what do we have? Number 5. Bank charges 300 are shown in passbook but not entered in cash book. This is again an error of omission. Banker has charged us 300 rupees. Banker has reduced passbook balance by 300. I have not recorded in my cash book. I should now record and reduce my cash book balance. When I record and reduce my cash book balance by 300 rupees, that is an error of complete omission which is to be rectified. So the entry will not come in BRS. Entry will come in amended cash book. Which side? Payment side. I will write bank charges 300. Then bills payable of rupees 40,000 had been paid by the bank but was not entered in the cash book. And bills receivable of rupees 12,000 had been discounted with the bank at a cost of 200, which also had been not recorded in cash book. Let's do one at a time. Let's now focus on bills payable of 40, which has been paid by the bank. My banker has paid 40,000 on my behalf. So my passbook has decreased. In the cash book, I didn't record. This is an error of complete omission. I have to record 40,000 payment. That 40,000 payment, what I'll record in my cash book will be payment. It's in my amended cash book, not in BRS. In my payment side of amended cash book, I'll write bills payable 40. Then let's go forward. Bills receivable of rupees 12,000 had been discounted with the bank at a cost of 200. I have a bill with me of rupees 12,000. I went to the banker and then told banker, can you give me money immediately? Though the bill will mature later. Banker agreed to give after deducting 200 rupees discounting charges. So basically banker gave me 11,800. I have received 11,800. This has been not recorded in cash book. This is an error of complete omission. I have to record 11,800 in my PRS? No. Amended cash book? Yes. On the receipt side, I should record 12,000 minus 200, 11,800. All the entries have been done. Now identify the balance as per amended cash book. Post that balance as per amended cash book to BRS and then find the balance as per passbook in BRS. Let's do this. 8,90,000 plus 8 plus 1,20,000 plus 11,800 comes to 10,29,800. From that, you deduct 5,400, 1,000, 300 and 40,000. You will end up getting 9,83,100 as your balance carried down. Balance as per amended cash book. In your bank reconciliation statement, you start with balance as per cash book as 9,83,100. To this you add 1,20,000, deduct 1,11,000, you will get 9,92,100 as bank balance as per passbook. That's what is being asked to form. This is the answer. Amended cash book followed by BRS after amended cash book. Let's now solve question number 6 from January 2026 RTP issued by ICA for CA Foundation Accounting. This is from our chapter 4, Valuation of Inventories. Looks like a reconciliation problem. Let's begin. Puneet closed his accounts on 31st of March each year, and without reading further, both of us know that the inventory valuation They wanted to do it on 31st March, but for some unforeseen circumstance, situation, or reason, they've done it either before or after. And using that, we have to end up finding the value of the inventory as on 31st of March. Inventory taking for the year ended 31st March 23 was completed by 10th April. So we know the value of the inventory in the godown on 10th April, which is 4,50,000. Using this 4,50,000, which is my inventory value as on 10th April, I need to come backward to 31st March. Usually, any purchase of inventory or inflow of inventory is added. Any sale of inventory or outflow of inventory is deducted. That is because we are going forward. In this question, because we are coming backward, what do? Any sale of inventory will be added. Any purchase of inventory will be deducted. Remember to adjust it at cost price. Remember to adjust it at cost price. Let's begin. 4,50,000 is the inventory as on 10th April 2025. And I'm trying to find the inventory as on 31st of March 2025. Let's begin. Goods sold to customer 1,10,000. Goods sold, inventory has gone out. We're not doing forward problem. We're doing backward. If I was knowing the inventory on 20th March and finding the value as on 31st March, I would deduct it. Because I know the inventory on 10th April, I'm finding the inventory as on 31st March. The inventory was there in my godown on 31st March. In this 10 days gap, I've sold. So if I count the inventory on 10th April, it is obviously less. I need to add back the inventory sold within these 10 days to find the inventory as on 31st March. Forgetting all that simple logic, outflow, add, inflow, deduct. Because we are doing ulta, I will add cost of goods sold. Remember, should add cost of goods sold, not sales. Sales given here is 1,10,000. But I have to do two adjustments for this. If there is any sales return, first I'll deduct sales return. Then I'll find the net sales. From that, I'll eliminate the profit margin and write in the outer column. Next, I have with me sales return. It is 10,000. I would deduct from my sales of 1,10,000, sales return of 10, which will give me net sales of 1 lakh. Then purchases is 85,000, which includes cash purchase of 10. I won't care about cash purchase. Cash purchase or credit purchase. Purchase is inflow. It is earlier added. Now, because I'm removing the impact, I will deduct it. And that also will remain in the inner column. This is because I want to deduct purchase return, if any, from this and then take it to outer column. And that sales less sales return is there in inner column because I need to eliminate profit element from the same. What do we have after this? Purchase return. How much is my purchase return? 2,500. I'll deduct it from my purchases. From 85, when I deduct 2,500 purchase return, it will come to 82,500. Then goods costing 20,000 received in March. Already received, it is included in March, it is included in 10th April's inventory. This is not inflow outflow adjustment. Remember that. This is a special item. For sale on consignment basis, of which 60% of the goods have been already sold. So this is not my inventory, somebody else's inventory. They've given it to me to sell for commission. So 20,000 worth of it is received. It's there in my godown, but it's not mine. As on 10th of April, 60% is sold. So how much is left in my godown? 40%. 40% of is there in my godown. When they counted physically, they've counted that also. But actually that doesn't belong to me. Now I'll eliminate. How much? 40% of 20,000. Less consignment stock which is there in my godown which doesn't belong to me, which is 40% of 20,000, 8,000 rupees is deducted from my inventory. Then one last adjustment. After stock was taken, it was found that certain very old and slow moving item costing 16 should be taken at 9,500. We all know that the inventory should be valued at cost or NRV, whichever is less. Cost is 16,000. Net realizable value is 9,500. When I value it at whichever is less, I would have to value it at 9,500. From 16,000, if I have to bring it down to 9,500, I have to write it down by 6,500. I will deduct 6,500 from the value of my closing stock. Then profit margin is 25% on cost. Okay, this 1 lakh is sale price. What I know is cost. If cost is 25, if profit is 25, cost is 100, selling price is cost plus profit. Sale is equal to cost plus profit. Profit 25 on cost, meaning cost 100, profit 25, sale is 125. I should do 25 by 125. Or you can use another logic where 25% on cost is 1 by 4 on cost. If it is 1 by 4 on cost, it's 1 by 5 on sale. 1 by 5 is nothing but 25 by 125. I'll deduct profit at 25 by 125, or your way 1 by 5. 25 ones are 25. 25 fives are 125. It comes to 20,000. When I deduct it, 80,000 is here. Now quickly take your calculator and do 4,50,000 plus 80,000, 5,30,000 minus 82,500 minus 8,000 minus 6,500. You will end up with 4,33,000 to be the value of inventory as on 31st of March 2025. Found keeping 10th April 2025 inventory as base. I hope you guys understood this. If you need any help on inventory or any other topic, do drop a message in the comments and I'll definitely see it and then provide you with help. Let's now solve question number 6 from January 2026 RTP issued by ICA for CA Foundation Accounting. This is from our chapter 4, Valuation of Inventories. Looks like a reconciliation problem. Let's begin. Puneet closed his accounts on 31st of March each year, and without reading further, both of us know that the inventory valuation, they wanted to do it on 31st March, but for some unforeseen circumstance, situation or reason, they've done it either before or after. And using that, we have to end up finding the value of the inventory as on 31st of March. Inventory taking for the year ended 31st March 23 was completed by 10th April. So we know the value of the inventory in the Goodwill on 10th April, which is 4,50,000. Using this 4,50,000, which is my inventory value as on 10th April, I need to come backward to 31st March. Usually, any purchase of inventory or inflow of inventory is added. Any sale of inventory or outflow of inventory is deducted. That is because we are going forward. In this question, because we are coming backward, what do? Any sale of inventory will be added. Any purchase of inventory will be deducted. Remember to adjust it at cost price. Remember to adjust it at cost price. Let's begin. 4,50,000 is the inventory as on 10th April 2025. And I'm trying to find the inventory as on 31st of March 2025. Let's begin. Goods sold to customer 1,10,000. Goods sold, inventory has gone out. We're not doing forward problem. We're doing backward. If I was knowing the inventory on 20th March and finding the value as on 31st March, I would deduct it. Because I know the inventory on 10th April, I'm finding the inventory as on 31st March. The inventory was there in my godown on 31st March. In this 10 days gap, I've sold. So if I count the inventory on 10th April, it is obviously less. I need to add back the inventory sold within these 10 days to find the inventory as on 31st March. Forgetting all that simple logic, outflow, add, inflow, deduct. Because we are doing ulta. I will add cost of goods sold. Remember, should add cost of goods sold, not sales. Sales given here is 1,10,000. But I have to do two adjustments for this. If there is any sales return, first I'll deduct sales return. Then I'll find the net sales. From that, I'll eliminate the profit margin and write in the outer column. Next, I have with me sales return. It is 10,000. I would deduct from my sales of 1,10,000, sales return of 10, which will give me net sales of 1 lakh. Then purchases is 85,000, which includes cash purchase of 10. I won't care about cash purchase. Cash purchase or credit purchase. Purchase is inflow. It is earlier added. Now, because I'm removing the impact, I will deduct it. And that also will remain in the inner column. This is because I want to deduct purchase return, if any, from this and then take it to outer column. And that sales less sales return is there in inner column because I need to eliminate profit element from the same. What do we have after this? Purchase return. How much is my purchase return? 2,500. I'll deduct it from my purchases. From 85, when I deduct 2,500 purchase return, it will come to 82,500. Then goods costing 20,000 received in March. Already received, it is included in March, it is included in 10th April's inventory. This is not inflow outflow adjustment. Remember that. This is a special item. For sale on consignment basis, of which 60% of the goods have been already sold. So this is not my inventory, somebody else's inventory. They've given it to me to sell for commission. So 20,000 worth of it is received. It's there in my godown, but it's not mine. As on 10th of April, 60% is sold. So how much is left in my godown? 40%. 40% of is there in my godown. When they counted physically, they counted that also. But actually that doesn't belong to me. Now I'll eliminate. How much? 40% of 20,000. Less consignment stock which is there in my godown which doesn't belong to me, which is 40% of 20,000, 8,000 rupees is deducted from my inventory. Then one last adjustment. After stock was taken, it was found that certain very old and slow moving item costing 16 should be taken at 9,500. We all know that the inventory should be valued at cost or NRV, whichever is less. Cost is 16,000. Net realizable value is 9,500. When I value it at whichever is less, I would have to value it at 9,500. From 16,000, if I have to bring it down to 9,500, I have to write it down by 6,500. I will deduct 6,500 from the value of my closing stock. Then profit margin is 25% on cost. Okay, this 1 lakh is sale price. What I know is cost. If cost is 25, if profit is 25, cost is 100, selling price is cost plus profit. Sale is equal to cost plus profit. Profit 25 on cost, meaning cost 100, profit 25, sale is 125. I should do 25 by 125. Or you can use another logic where 25% on cost is 1 by 4 on cost. If it is 1 by 4 on cost, it's 1 by 5 on sale. 1 by 5 is nothing but 25 by 125. I'll deduct profit at 25 by 125, or your way 1 by 5. 25 ones are 25. 25 fives are 125. It comes to 20,000. When I deduct it, 80,000 is here. Now quickly take your calculator and do 4,50,000 plus 80,000, 5,30,000 minus 82,500 minus 8,000 minus 6,500. You will end up with 4,33,000 to be the value of inventory as on 31st of March 2025. Found keeping 10th April 2025 inventory as base. I hope you guys understood this. If you need any help on inventory or any other topic, do drop a message in the comments and I'll definitely see it and then provide you with help. Let's now solve question number 7 from our RTP for Jan 2026 CA Foundation Accounting. This question 7 is on depreciation and amortization. To be precise, this is on depreciation. Let's start solving. Let's start reading the question at first place. Messrs. Alankrit Transport Company purchased 10 buses. This is a very famous question. We've done this question plenty of times. 10 buses, 10 trucks, 50 lakh per bus. One bus meets with accident, another new bus is bought later. Let's solve it as if we're solving it for the first time. 10 buses and each bus is costing rupees 50 lakh, and this was purchased on 1st of October 2021. And on 1st of January 2024, one of the buses involved in accident. So we'll start with 21. We'll do no adjustment, but do just depreciation for 21, 22, 22, 23, 23, 24. But in 23, 24, one of the buses meets with accident and that bus will completely get destroyed. So when I prepare my working note, I'll prepare one column for one bus, one column for 9 buses and a total column. That will help me do ledger account with ease. Invest time on the working note so that you can do the ledger account with ease with very less probability of doing error at any place. Don't try to skip working notes because working notes are a savior in the examination. 1st January 24, one bus meets with accident and completely destroyed. 35 lakh rupees is received from the insurance company, and on the same date another bus is purchased for the sum of rupees 60 lakh and depreciation is 20% SLM. Perfect. Let's begin. We'll start with working note. The purchase happened on 1st of October 2021 and we bought 10 buses. I'll prepare one column for one bus and one column for the remaining 9 buses which will not meet with accident. 50 lakh here and 4 crore 50 lakh here. Together 5 crores is the value of the buses that I purchased. Then going further, we are depreciating the buses under SLM method and the year is ending on 31st of March. 31st of March 2022 when I rate less depreciation. Under SLM method, depreciation is done at 20% on this first bus which is of 50 lakh but not for the full year. I would have to do it for 6 months because the bus was purchased on 1st of October and depreciation is computed on 31st of March wherein the bus is used only for 6 months. I'll do 50 lakh into 20% into 6 by 12. This gives me depreciation of 5 lakh. And on the 4 crore 50 lakh asset, again I'll do same depreciation at 20% for 6 months. This will give me 45 lakh as the depreciation on those 9 buses. Both put together, depreciation comes to 50 lakh, and the WDV as on 1st of April 22 for all the 10 buses together is 5 crore minus 50 lakh, 4 crore 50 lakh, and for one bus it is 45 lakh, for 9 buses it is 4 crore 5 lakh. And I'm going to do the same at the end of year 22-23, that is as on 31st of March 2023. The bus is meeting with the accident on 1st of January 2024, that's next year. And depreciation again here, same method, SLM. So 50 lakh into 20%, 10 lakh, and 4 crore 50 lakh into 20%, 90 lakh. Together, 1 crore is the depreciation. As on 1st of April 2023, book value of the asset will be 45 lakh minus 10 lakh, 35 lakh, 4 crore 5 lakh minus 90 lakh, 3 crore 15 lakh, both put together 3 crore 50 lakh. And the depreciation is to be computed on that one single bus, not till 31st of March 24, but till 1st of January 2024. This is because that one bus met with accident on 1st of January. Let me do depreciation not on 35 lakh but on 50 lakh at 20% for the period 9 months, that is April, May, June, July, August, September, October, November, December. 9 months. Let me do 50 lakh into 20% into 9 by 12. That comes to 7 lakh 50. This 35 lakh WDV worth of asset, which is now depreciated by 7 lakh 50, has to become zero. If it has to become zero, I have to de-recognize. I have to remove this. The removal will happen at 27 lakh 50. 27 lakh 50 is the book value of that one bus which is meeting with accident. So I'll write book value of the machine. Oh no, bus destroyed, not truck. Bus destroyed is 27 lakh 50, and the price that you received on the discarding the bus from the insurance company is 35 lakh. So I'll compare 27 lakh 50,000 with 35 lakh. I've received more money, so I made profit on this bus meeting the accident. So some accidents are good. 35 lakh minus 27 lakh 50, 7 lakh 50,000 is the profit. The accounting entry will be, I'll debit my bank account or insurance company account, depending if I've received or if I'm yet to receive, to the extent of 35 lakh. I'll credit my bus to the extent of 27 lakh 50. Difference of 7 lakh 50 credit will be P&L. That's the accounting entry. And on the very same day, we bought an other bus for rupees 60 lakh. So I would add another bus to the extent of 60 lakh. At the end of the year on 31st of March 2024, I'm going to charge depreciation. No depreciation on this bus because it is now removed. It's not there anymore. And on this 3 crore 15 lakh WDV, remember the depreciation remains same 90 lakh what we charged in the last 2 years, because method of depreciation followed in this case is SLM. I'll charge 90 lakh depreciation. And on this 60 lakh, when I'm computing depreciation at 20%, I need to keep in mind the fact that asset was not purchased at the beginning, but it was purchased on 1st of January. Meaning this asset is put to use only for January, February, March, 3 months. So I'll compute depreciation only for 3 months. 60 lakh into 20% into 3 by 12, which comes to 3 lakh. This is 57. 3 crore 15 minus 90, 2 crore 25 lakh. This is anyway 0. I'll write the total as on 1/4/2024. Have they asked us the ledger account for 1 year? No. 31st March 24 and 31st March 25. So I need to charge 1 more year depreciation and find the WDV as on 1st of April 2025. And this will help me draft the ledger. Let me write here 31st of March 2025 depreciation. This is done. And on this, I'll continue to charge same 90 lakh as depreciation because we're following SLM. And on this one new bus, I'll compute depreciation as 60 lakh into 20% full year depreciation. No months because it's there for entire year in 24-25, which comes to 12 lakh. So 57 minus 12, 45 lakh. 2 crore 25 minus 90, 1 crore 35, and this is anyway 0. Total depreciation is 1 crore 2 lakh, and book value as on 1/4/2025 comes to be 1 crore 80 lakh for 9 buses which were purchased initially and the one new bus that was purchased later put together. And I have to draft ledger account for 2 years, 31st of March 2024 and 31st of March 2025. So these are the 2 periods for which I have to draft my machinery account. So shall we draft the ledger now? Focus only on the total column. You might have been thinking that sir spent so much time doing the working note, but all the time that is spent on doing the working note is going to be paying us the reward when we do ledger account. When I draft the ledger, the bus account, I would write 1st of April 2024 balance brought down. How much is it? It is the total amount what we have here, 3 crore 50 lakh. 3 crore 50. What do I have after 3 crore 50? I have to depreciate this by 7 lakh 50 minus write it on the credit side in my bus account, depreciation 7 lakh 50. Then the machine is getting removed. I'm going to say the bus is getting removed, 27 lakh 50. For this, I've written a detailed journal entry. Bank account debit, insurance company account, or bank or insurance company, depending whether received or not. To P&L, to bus. Bus has to be basically credited by 27 lakh 50. And when I write that insurance company is giving me 35, basically I was supposed to credit by 27 lakh 50, but I credited by 35 lakh. That excess amount credited represents profit. It should be actually credited to P&L, but it is routed through bus account. Instead of 27 lakh 50 when I credit 35, whatever is the excess credit is the profit, which I'll debit in my bus account and I will be crediting it to P&L. I hope you guys understood this. And then on the very same day, we have also purchased a new bus that would come here 60 lakh. Give me a moment. Let's just swap the places. The new bus value is 60 lakh. And this profit seven lakh 50,000. 1st of January 2024. Everything sits perfect now. So by this, I'm done with this removal. I'm done with the purchase of this new bus. I just have to write the total depreciation, which is 93 lakh. 93 lakh of depreciation in my bus account. I'll write credit side by depreciation 93 lakh. Now I'd have to identify the balancing figure here. I'll tell you how to check whether the answer that you're getting in depreciation is right. Find the balancing figure in your bus account and then check if that will match with the number here 2 crore 82 lakh. If it does, then you've done everything right. Check 350 plus 60 plus 7 lakh 50. 4 crore 17 lakh 50. From 4 crore 17 lakh 50. If you deduct 7 lakh 50, 35 lakh and 93 lakh, you will get 2 crore 82 lakh rupees, which is the balance carried down. In my bus account, in the next year, I'll write balance brought down as 2 crore 82 lakh. And that's the value that we have here as well. I'll depreciate it by 1 crore 2 lakhs and I'll end up with 1 crore 80. I'll write by depreciation 1 crore 2 lakh, 2 crore 82 minus 1 crore 2 gives us balance carried down to the extent of 1 crore 80 lakh. And this is the 2 years for which the ledger account is being asked in the question. And by this, we complete question number 7, that is on the topic of depreciation from Jan 2026 RTP. Let's now solve question number 8 from our Jan 2026 RTP issued by ICI CA Foundation Accounting. This question number 8 is from the topic of bills of exchange. Without wasting much time, let's start reading the question. On October 2025, they have not mentioned the date, they only mentioned the month and the year. X sells goods to Y for 25,000 and this is interstate sale. They have told IGST applicable at 18%. Okay. X is the seller. X has to collect 25,000 for the goods sold. He also has to collect IGST at 18% on this 25,000 and X has to pay this money to the CBDT. So the entry will be Y account debit to sales to IGST basically. Good. Output IGST, not input. And from whose perspective are we doing this entry? Yeah, we're doing it in the from the perspective of X. Let's start writing the accounting entries. Y is our debtor. I'll debit Y account and then credit sales. Sales is to the extent of 25. On this, I'll also collect IGST at 18% and this is output IGST. I would have to collect it and pay it to government. So 18% of 25,000 comes to 4,500. Together, 29,500 is the money that I'm supposed to be collecting from Y. Debtor account debit to sales is the usual entry. Debtor's name is Y, Y account. To sales is okay. Beyond sales of 25, I'm further collecting 4,500 from Y. Got it? What's next? And drawn 2 bills of exchange on him. First one for 15,000 for 2 months. Second bill for the balance for 3 months. I'm supposed to recover 29,500 from Y. I'm drawing 2 bills. bill number 1 for 15,000, bill number 2 for balance. Balance is 14,500. All right, bills receivable is an asset. Number 1, 2 months bill 15,000. Bill number 2 for 3 months 14,500. Together I'll credit Y account by 29,500. So this is the entry for bills receivable. It's a bill drawn on Y and acceptance received. Two bills. Bill number 1, 2 months 15,000. Bill number 2, 3 months 14,500. What do we have next? Y accepts and returns these bills to X. That's already done. These bills were sent to the bank for collection. Oh, these bills are not kept till maturity, not discounted with banker, not endorsed. But the drawer is choosing to send them to bank for collection. When the bills are sent for collection, banker will not instantly give you money. Banker will take the bill from you, keep it safe and wait for the date. On the maturity date, banker will collect the money and give it back to you. So it is done with an intention to keep the safety of the bill and to ensure that the money is collected on time and then given to you. Entry is bills for collection, a new asset, debit 29,500. Credit will be bills receivable of 2 months and bills receivable of 3 months, 15 and 14,500. This is the entry for bills sent for collection. On the maturity date, banker will give you money, not immediately. If it is bill discounting, banker will give you money immediately and will also cut discounting charges. If it is bill sent for collection, banker will give the money to you only on the maturity date and banker will not deduct any charges. It's part of the usual banking services. Then on 1st of October, same date, in the due course, X receives information from the bank on the due date of the respective bill that bill for 15,000 has been duly met and the other bill is dishonored. So the 15,000 rupees bill is honored and the money is received. 14,500 rupees bill is dishonored and we did not receive money. Bill was drawn on 1st October. Bill is drawn for 2 months. So 1st November, 1st December. On 1st December, I will be told that I have received money for bill number 1. 2 months bill, 15. Entry is bank account debit. I won't credit bills receivable because it's already credited by debiting bill sent for collection. I will now credit bill sent for collection 15,000. This is bill number 1 of 2 months for 15,000 honored. And that second bill, which is 3 months bill, is dishonored. That is not on 1st of December. That is 1 month later. On 1st of January 2026, if I would have received money, I would have written bank to bills for collection. I don't receive money. I receive the bill back from the bank. So I'll debit bill account and I'll credit bill sent for collection. This is for 14,500. On this bill, I might have paid noting charges. Have they given any? Yeah. Noting charges are paid to the extent of 500. To prove that the bill is dishonored, the banker has charged me money. That is all notary fees. So this is an expense. I'll debit noting charges. I've paid to banker, credit bank to the extent of 500. Noting charges is incurred when the bill is dishonored on the date of dishonor. This is initially paid by the drawer, but later it has to be reimbursed by drawee. He is the reason for the bill dishonored, so he's the one you should pay. I won't keep this bill of 3 months dishonored with me. I'll give it back. I'll credit bills receivable 14,500. I'll also credit noting charges 500 because that's not my expense. From Mr. Y, I'm supposed to collect 14,500 for bill number 2 and I'm also supposed to collect 500 towards noting charges. Together, Y now owes me 15,000 rupees. Anything else that's been asked? I think that's it. They've asked us to ignore date column, but I've written the entry with date column. This is the entry at first for sales made, including GST. This is the entry for bill received. This is the entry for bill sent for collection. Then the entry for bill sent for collection honored. Then bill sent for collection dishonored. Noting charges paid. Dishonored bill returned to Mr. Y. Let's now start solving question number 9 from our RTP Jan 2026 for CA Foundation examination. This question number 9 is on final accounts of sole proprietor. They have given trial balance of Sri Mohan Gupta. What do they want us to do? I think they would want us to prepare trading P&L and balance sheet. No, doesn't look like a question where they would want us to do manufacturing. Anyways, let's see. Come to the end of the question. They've told prepare trading and profit and loss account for the year ended. And they also want us to do balance sheet. Okay. Simple. Let's do it. But before we solve, we'll mark the items with adjustment so that we will end up giving little space for them or open ledger if need be. Depreciation is to be provided. On what items are we supposed to provide depreciation? Building, furniture and fixture, office equipment, and motor car. Furniture and fixture, office equipment, building, motor vehicle. All these 4 items which have depreciation adjustment, I put star so that I can write their balance in the inner column in my balance sheet, and I'll write the post depreciation value only in the outer column. Then I have value of the stock. This is closing stock. 1 month of rent for godown is outstanding. Oops. If 1 month rent is outstanding, what is given in the trial balance is 11 months rent. Come here. Do you find godown rent, godown rent, godown rent? Godown rent 55,000 is only for 11 months. 1 month rent is completely outstanding. So 55,000 is paid, 5,000 is outstanding. Total rental expenditure is 60,000. What's after rent for godown? Then there is an adjustment on interest on loan from Rajan, 10%. That loan is taken in the middle of the year. So we might have to pay interest on that loan. So next to this 4,400, I'll put one star. Once we prepare our final accounts on the loan, I'll compute interest at 10%. Not from the beginning to end, but from 1st of July. If that interest amount matches with 4,400, good. If it doesn't, then I would have to record the outstanding interest as liability and also as expense. What do we have after that interest adjustment? After interest adjustment, I have reserve for bad debts is to be maintained at 5%. Do we have provision for bad debts anywhere here already? Provision for bad debts 10,000 is there. Put one star next to it because we might have to revise this provision. And this might also affect my debtors. Debtors 2,80,000 cannot be written in outer column. I have to record it in inner column in my balance sheet on the asset side. I have to deduct the current year provision after revision, and only then the balance will go to balance sheet outer column. What do we have after sundry debtors? Then we have insurance premium includes 42,000 paid towards proprietor's life insurance policy, and balance of the insurance charges cover the period from 1st of April 24 to 30th of June 25. Okay. There is some adjustment for insurance premium. Identify insurance premium. Where do we have insurance premium? Here, 48. One star next to it. So insurance premium has to be dealt with. We'll deal with that. Then any other item of adjustment? After insurance premium, F done. That's it. We mark all the items which has adjustment. There is more adjustments in insurance premium. Part of it is drawings. Part of it is prepaid for next year. We'll deal all of it at once when we read the adjustment. So now let's start from the beginning. We mark everything which has adjustment. Never ever solve a final accounts question straightly. First finishing trading and then P&L and then balance sheet. Or don't ever start the question without knowing the adjustments. Because you might end up writing that amount in the outer column. Later realize that it has adjustment. Don't know where to write. You don't have space. So don't do this. First read the adjustment. Make the marking. Then open the format of trading, P&L, balance sheet. All of it. Then read the items in the order and post them to the respective place. Don't try to finish trading first and then do PL and then do balance sheet. If you try to do that, you will end up taking way more time than usual for solving the questions. That's the point. Let's begin. Capital account. Capital account 14,11,400 will appear in my balance sheet, trading, P&L, balance sheet. In the balance sheet, on the liability side, I would write capital as 14,11,400 in the inner column. Why? From this 14,11,400, I have to deduct drawings and I should also add current year net profit. Only then the balance will go to outer column. What's after 14,11,400? Purchases. How much is the purchases? 12 lakh. Purchases of 12 lakh will go to trading account debit side. I can see right below this that there is purchase return. So I'll write purchases in inner column in my trading so that I can deduct purchase return from the same and then write the net purchases to outer column. Purchase, trading debit, 1 lakh. Then we all know purchase return. How much is purchase return in this case? 18,000 rupees. 18,000 purchase return I'll deduct from my purchase. From 12 lakh, if I deduct 18,000, I'll end up getting 11,82,000 as my purchases net. Then I have with me sales. Sales is 15 lakh rupees and sales return is 24,000. Sales return of 24,000 will be deducted from sales of 15 lakh. In my trading account, I'll write on the credit side, sales 15 lakh less sales return 24,000, whatever was just given. From 15 lakh, if I deduct 24, I'll get 14 lakh 76,000 as my net sales. I've written sales minus sales return. Let's proceed. After writing sales minus sales return, we'll go for freight inwards. Freight inwards 62,000 is direct expenditure. Expenditure incurred to carry the inventory to the factory. Direct expense. If it is freight outward, it will be written in P&L account on the debit. Because this is direct expense, I'll write 62,000 in my trading account on the debit side. What do we have after this? Then I have with me carriage outwards. Carriage inwards is direct expense trading. Carriage outwards is indirect expense P&L. 8,500 will be written not in trading but in P&L account debit side as carriage outwards expense. Then rent of godown. Rent of godown, I'll write in my P&L, but in the inner column 55,000. Why? There's an adjustment. I know the adjustment that there is 1 month rent outstanding, but I will not adjust it right now. I'll adjust it later. For now, we'll write rent of godown 55,000 in the inner column. Later, we'll adjust that 1 month outstanding and then post it to outer column. What do we have after rent of godown? Rates and taxes 24,000. Rates and taxes 24,000 is expenditure in my P&L. I would write rates and taxes, rent and taxes, rates and taxes, rates and taxes. I would write 24,000 in the debit side of trading account. After that, salaries 72,000. Salaries 72,000 is an expenditure in my P&L. I would record it as it is. There is no adjustment whatsoever. Salary 72 done. Then I have with me discount allowed. How much is discount allowed? 7,500. Discount allowed 7,500 is expense in P&L. I will write discount allowed 7,500 expense in P&L account debit side. I have with me discount received 12,000. This is income to be credited in P&L. In my P&L, I'll give little space for gross profit. I'll write discount received 12,000 on the credit side. Got it? What do we have after discount received 12? Then I have with me drawings of 20. Drawings is reduction in capital. In my balance sheet, on the liability side, capital will be written in inner column. From that, I will deduct drawings of 20. In my balance sheet, on the liability side, capital is on the liability side inner column. From that, I will deduct drawings of 20,000. What's after drawings 20? Then we have with us printing and stationery 6,000. Printing and stationery 6,000 will be written in P&L account on the debit side. Printing and stationery 6,000. Then insurance premium 48,000 is an expense in P&L, but there are two adjustments against this. One, part of it is personal insurance, which will become drawings. Second part of it is some insurance premium is prepaid for next year. That should be again deducted from expense to be written as asset. So let's write insurance premium in the inner column, 48,000 rupees. What's after that? Then we have electricity charges. Electricity charges of 14,000 rupees is expense to be written in P&L account debit side. I'll write electricity charges 14,000 expense in P&L account debit side. What's after electricity that we have? We have general expenses to the extent of 11,000. General expenses of 11,000 is again an expense. I'll write it in my P&L account on the debit, general expenses 11,000. What do we have after general expenses? Then I have bank charges. Bank charges of 3,800 is also expense. I'll write bank charges also in P&L account debit side 3,800. Then I have bad debts. Bad debts is again 12,200 rupees. Bad debt is again expense. Bad debt will be written in P&L account on the debit side 12,200 rupees. Bad debt 12,200 done. Then come to the next expense. We have repairs to the motor vehicle 13,000. Repairs to the motor vehicle 13,000 will also be written in P&L account debit side. Repairs to motor vehicle 13,000 rupees. Done. Next, interest on loan is an expense to the extent of 4,400, but there is an adjustment. Loan was taken from Mr. Rajan during the year on 1st of July. From 1st of July on that loan of 60, I need to compute interest at 10%. Check whether if there is any outstanding. Right now, we'll not do all that. We'll do that when we read adjustment. Now I'll write interest on loan 4,400 in the inner column. That's it. Nothing else. After I write interest on loan 4,400 in inner column, next I have with us provision for bad debts 10,000. This is existing provision. already created in previous year. Usually from our debtors in the balance sheet, I am supposed to deduct provision. That provision existing is 10. I would have deducted 10 if not for any adjustments. But they've told provision to be maintained at some percentage. I'll take the debtors that they give, apply the percentage, and then check the provision to be maintained. If that provision to be maintained is more than 10, I have to create that additional provision by debiting P&L. If that provision to be maintained is less than 10, then there is excess provision. I'll write off some provision by writing it to P&L account credit. Right now, I don't know anything. I'll tell the existing provision is 10 and then wait for the adjustment. What's after this? I have loan from Mr. Rajan, 60,000. Liability. In the balance sheet on the liability side, I'll write loan from Rajan, 60. I've taken loan from Mr. Rajan, liability of 60, balance sheet liability. Then I have sundry creditors to the extent of 62,000. This is again a liability in the balance sheet. I'll record sundry creditors, 62,000. Then we have motor vehicles as asset for 1 lakh. In the balance sheet on the asset side, I'll write motor vehicle 1 lakh inner column. What else do we have? We have land and building to the extent of 5 lakh. This is also asset. After motor vehicle, I'll record land and building 5 lakh rupees as asset inner column because there is depreciation to be deducted. Then we have office equipment 2 lakh. This is also asset in the balance sheet on the asset side. I would have to deduct depreciation on this later. Then furniture and fixture, same problem, 50,000 in the balance sheet on the asset side inner column because we would have to further deduct depreciation to find the closing balance. After furniture and fixture, we have stock as on 31st March 2024. This is opening balance 3,20,000. Opening stock should be written in trading account. On the debit side, I would write opening stock 3,20,000 rupees. After this, we have sundry debtors to the extent of 2,80,000. In the balance sheet, on the asset side, I would write 2,80,000 debtors as my asset. And cash at bank 22, cash in hand 16. These two are assets. In my balance sheet on the asset side, I would write cash at bank, cash in hand, assets as 22 and 16. By this, I've completed the entire trial balance. What will I do now? I'll go to adjustment, see each adjustment one at a time, make the responsible adjustment and then leave the impact on my final accounts. To begin with, building depreciation by 5%. Let's do. On land and building, I'll do depreciation at 5%. 5 lakh into 5% comes to 25,000. Building closing will be 4,75,000. This 25 building depreciation should come in my P&L. In profit and loss statement, I will write 2 depreciation on land and building. It is 25,000. You can post it all together. I've written it now. Then furniture and fixture to be depreciated by 10%. On furniture, I'll write 10% depreciation, which is 5, making it 45. This 5,000 I will record here. Furniture depreciation 5,000. Then on office equipment 15%, on motor car 20%. On office equipment 15%. 15% of 2 lakh is 30. Post depreciation it will become 1,70,000. And 30,000 depreciation on office equipment will be written in my P&L account on the debit. Office equipment depreciation. Office equipment depreciation 30,000. 15% of 2 lakh 30. Then on motor vehicle I need to depreciate by 20%, which is 20. Motor vehicle will become 80,000. 20,000 depreciation I'll write here. So total depreciation is 20 plus 25 45. 45 plus 30 75. 75 plus 5 is 80. Total depreciation written in P&L debit. Then value of stock at the close of the year is 4,10,000. This is closing stock. This will be written in trading account on the credit side as closing stock, in the balance sheet on the asset side as stock. Let me write. In the balance sheet on the asset side, I will write stock 4,10,000. In the balance sheet on the asset side 4,10,000. Next up, in our trading account on the credit side, I would write closing stock 4,10,000. What's after closing stock 4,10,000? 1 month of go down rent is outstanding. If 1 month rent is outstanding out of 12 months, can I say 11 months rent is paid? Rent in my P&L is 55. 55 is for 11 months. Do 55,000 divided by 11. you get 5,000. That is 1 month rent which is outstanding. Rent which is outstanding is expense and liability. To the extent it is expense, I'll record it in my P&L, increasing my rent from 55 to 60. 5,000 because it is not paid. In the balance sheet, on the liability side, I'll record outstanding go down rent, 5,000. Expense also booked, liability also recorded. I have with me interest on loan from Rajan is payable at 10% per annum. The loan was taken on 1st of July. How much is the loan from Rajan? 60. On 60,000, would have to compute interest at 10% from 1st of July to 31st of March. Let's count. July, August, September, October, November, December, January, February, March. How many months is it? 9. Once again, July, August, September, October, November, December, January, February, March. 9 months. On 60,000 at 10% for 9 months. How much do we get? Interest should actually become 60,000 into 10% into 9 by 12. Interest should actually become 4,500. But in trial balance, there is only 4,400. Meaning what? 100 rupees of interest is not paid. Interest expenditure is 4,500, but what is paid is only 4,400. So only 4,400 is available in trial balance. 100 what is missing, I will write it as outstanding interest. Outstanding interest is an expense, though it is not paid. And this 100 should be shown in my balance sheet on the liability side as interest on loan 100. So I've written it as liability 100. I've also written it as expense 100. Next adjustment. Reserve for bad debts, basically reserve for doubtful debts, is to be maintained at 5% of debtors. How much is our debtors? Debtors is 2,80,000. Provision is to be maintained at 5%. 5% of 2,80,000 comes to 14,000. So provision is to be maintained at 14. But provision what is already there is 10. 4,000 rupees of provision has to be created in the current year. The provision to be created 4,000 will become expense. When I create 4,000 rupees of provision, in my P&L, I'll record provision for doubtful debts 4,000 created, 14,000 to be maintained, 10,000 existing, 4,000 provision created as expense. Once I create 4,000 provision, my 10,000 rupees of provision will become 14,000. From 2,80,000 I will deduct provision of 14. My debtors will actually become 2,66,000. Debtors is 2,80,000. Provision is to be maintained at 5%, which is 14. Already provision 10. Provision to be created 4. 4,000 is expense in P&L. Provision will become 10 to 14. 14 is deducted from debtors to revise my provision to revise my debtors to 2,66,000. What's after this provision? Insurance premium includes 42,000 paid towards proprietor's life insurance policy. 42,000 is paid towards proprietor's life insurance. That is personal expense. It should not be written as an expense in my PL. In my PL, insurance premium 48. From that, I'll deduct personal life insurance of 42. This 42 is not an expense, so I've reduced expense. 42 is drawings. Drawings will reduce my capital. In my balance sheet on the liability side, from my capital, I'll deduct 42,000. In fact, let me make it nicer for you. Personal insurance minus 42,000. So there are two drawings. One is cash withdrawn 20. Second one is insurance of 42. Done. Next, the balance of the insurance is taken from 1st of April to 30th June. But our accounting year is 1st of April to 31st March. We've taken insurance from April to June of next year. This year April to June of next year. This year April to next year March is 12 months. April, May, June. So this insurance policy is taken for 15 months. 15 months premium is paid. 12 months is current year expense. 3 months will become prepaid insurance expense to be recorded as asset. Let's see this. How much are we left with after we deduct 42,000 from 48? We're left with 6,000. In that 6,000, how much is prepaid? 3 months of insurance premium is prepaid. 6,000 divided by 15 into 3. That is for April, May, June of next year. 1,200 is prepaid insurance. If I deduct it, my insurance premium will become 4,800. This 1,200 rupees of insurance premium, whatever I've paid in advance, is asset, prepaid expense. In my balance sheet, on the asset side, I will record prepaid insurance premium 1,200 rupees. What is after that? That's it. We're done with all the adjustments. Now what we need to do is pretty simple. Close our trading account, identify GP, put it into P&L account, identify net profit, add it to capital and see our balance sheet tally. Check the total here. 14 lakh 76 plus 4 lakh 10 comes to 18 lakh 86. From 18 lakh 86, deduct 3 lakh 20, 11 lakh 82 and 62. We'll end up getting 3 lakh 22,000 as gross profit. In my P&L, I'll write gross profit 3 lakh 22. Add 12,000 discount to it. It will become 3 lakh 34,000 as total on the credit side. From this 3 lakh 34, I will deduct. Take your calculator, type 3 lakh 34. Do minus 8,500, minus 60,000, minus 24, minus 72, minus 7,500, minus 6,000, minus 4,800, minus 14,000, minus 11,000, minus 3,800, minus 12,200, minus 13,000, minus 4,500 and minus 4,000. Further deduct 80,000 depreciation. You'll end up with net profit of 8,700. This net profit of 8,700 should be added to our capital. Then check how much is the capital. 14 lakh 11,400 minus 20 drawings minus 42 personal insurance minus 8,700 net profit. That leaves you with 13 lakh 58,100. 13 lakh 58,100 capital plus 60 plus 62 plus 5,000 plus 100. Total on the liability side comes to 14 lakh 85,200. Similarly, let's take the total on the asset side. 80,000 plus 4 lakh 75,000 plus 1 lakh 70 plus 45 plus 2 lakh 66 plus 22 plus 16 plus 4 lakh 10 plus 1,200. This will leave you with 14 lakh 85,200 as the total of the balance sheet on asset side. As the liability and the asset side match, that's the end of the balance sheet on this final accounts question. Let's now solve question number 10 from our Jan 2026 RTP issued by ICI for CA Foundation examination. This question is from the chapter of not-for-profit organization. They've given us receipts and payment account, like you can see. So basically, they would have requested you to prepare income and expenditure. Let's anyways read the end of the question. What do they want us to do? They want us to prepare income and expenditure account along with balance sheet as on that date. So receipts and payment account is given. Income and expenditure and balance sheet is to be prepared. We all know receipts and payment is equivalent to cash book. Income and expenditure is equivalent to P&L account. Balance sheet is balance sheet. The difference between NPO and other final accounts of profit making entity is P&L account would become income and expenditure. We would not find profit. We would find excess of income over expense. We would find excess of expense over income, which is surplus and deficit, which is like profit or loss. Another important point is you cannot withdraw the money from an NPO. And the capital in an NPO is not capital, but it is called as capital fund. And whatever donations and all that you receive will get added to the capital fund. Let's see this one item by item. To begin with, we have with us, we'll just read the adjustments first, make the marking and then start the rest of the answer. There is some adjustment with regard to the first one. The adjustment is they've given a lot of opening balances. Subscription, there is some due. So in the receipt side, you have subscription. We'll open one subscription account. That's when we'll identify how much is the subscription income for the year. Then after that, furniture, there is some balance. Furniture, if there is any receipt or payment, furniture is, there is some payment for furniture, meaning furniture is purchased. I'll open one furniture ledger. Then books, there is an adjustment. Books, have you paid any money for books? Yes, you have paid some money. Books have been purchased. I'll open one ledger. First, identify the adjustments and make marking in the base data so that you know this item has adjustment and you'll be able to adjust it. If you straight away start solving it, then you'll get stuck later. Then books, we put one star. Building, on the payment side, do you have building anywhere? Building? No. No adjustment on building. Receipt side, do you have any building? No. Building right now looks like it doesn't need any working note, doesn't need any ledger. Later, if there is any, we will see. Stock of sports material, on the payment side, you have sports material here. You paid money for sports material. Sports material is an asset. It will be opening, it will have opening balance, it will have purchase, it will have consumption, it will have closing balance. You'll open one ledger for sports material, put one star there. After that, creditors for printing. This don't open ledger, but remember this is like outstanding expense for printing. And this has to be marked next to our printing expenses. On the payment side, you have printing and stationery, put a star. 12,000 rupees is paid, but 12,000 rupees is not the element of expense. Along with 12,000, we have to further add 2,500 as expense when we prepare income and expenditure. So our current year expense will not be 12, but it will be 14,500. Then some subscription information is there. So we'll open one subscription account. Have I already put a star? Yeah. If you want, I'll put one more star. Then after subscription information, we have municipal taxes is paid on 1st of April every year. See, in the present question, year ending is 31st December. So our year is January to December, but municipal tax is paid April to March. When we pay April to March, no, 3 months of municipal tax is paid in advance and 3 months of municipal tax is already there as opening prepaid. So every year beginning there is 3 months opening prepaid. Every year's end there will be 3 months opening prepaid. So opening prepaid and closing prepaid both are there with regard to municipal taxes. So actually adjustment is not needed, but we would still have to write it as an asset. So I'll put one small star next to this. In 6,000 into 3 divided by 12, how much our amount comes? That will be opening balance sheet asset and closing balance sheet asset. 6,000 itself is expense, 6,000 is payment. But anyways, I'll teach you with the help of a detailed working note later. Then we're done with municipal tax. One member donated billiards table. This will not affect any other item in our balance sheet or income and expenditure. Billiard table will become an asset, 50,000. Donation received for billiard table will become a liability in the liability side of the balance sheet. So liability side you write 50, asset side you write 50. Ashte. Easy to do. Then we have with us books are worth 46,000 and stock is worth stock of sports material is worth 4,000. This is closing balance. This will appear in the balance sheet as asset, and you already put star mark for books and star mark for sports material. In that ledger, I'll write these two balances as closing balance. We would know opening, we would know closing, we would know receipts and payment in this question. Income and expenditure will be balancing figure. Any ledger that you prepare, opening balances are given, closing balances are given, receipts and payment ledger is given. From there, I'll write receipts and payment balance also. Balancing figure will be income and expenditure, which will go to income and expenditure account. I hope everyone understood this part. Let's begin. Don't ever income and expenditure first and then prepare balance sheet. Always keep the format of income and expenditure and balance sheet ready. As and when you read that, keep posting. They've asked only income and expenditure and balance sheet. But to close my balance sheet, I need surplus or deficit. Excess of income over expense or expense over income from my income and expenditure. So I'm preparing this. Let's say I found surplus here. This surplus should be added to the capital fund. I don't know capital fund. I need to find the opening capital fund. So, though they've asked balance sheet as on 31st December 2025 in the question, I would also be required to prepare balance sheet as on 1st of January 2025. This is not because they've mentioned in the question, but this is because I cannot complete my balance sheet as on 31st December without opening capital fund. And to know opening capital fund, I open opening balance sheet. Let's now begin from the beginning. What is the first item that I have? I have opening bank balance 7,500. 7,500 rupees, which is opening bank balance, will appear in my opening balance sheet as an asset. I'll write in my opening balance sheet cash and bank balance 7,500 asset. Then subscription. Subscription received during the year is 40,000. In receipts and payment, I've written subscription to subscription. In subscription account, I would have to write by receipts and payment. How much is received? 40,000. This is the money received. Don't end here. They've given an adjustment here, including 2,000 rupees for 2024. My current year is 2025. My current year is 2025. I have received 2,000 rupees for previous year. If I have received 2,000 rupees for 2024, that means in the previous year, there was some amount of subscription amount earned, accrued, but not received. 2025 is current year. 2024 is last year. In the last year, I have earned some subscription income, which I have not received in current year. That will appear as an opening balance, debit balance in my subscription account as an asset. How much? I don't know. Sir, isn't it 2? No, 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 no. Received is 2. Outstanding need not be 2. If outstanding is 2 and received is 2, there would be no closing balance. What if last year's subscription accrued but not received is 3? You received 2. Here you will write balance carried down for 2024, 1000. There might be some amount of opening outstanding subscription still not received. We don't know right now. I can't conclude. I'll write by receipts and payment 2024, 2000 and wait. What's after this? Then I have donation. 2 donations, 15,000. I'm assuming this donation is not revenue in nature. Donation is capital in nature. Because this donation is capital in nature, in my balance sheet in my closing balance sheet on the liability side, I will write donations 15,000 rupees. Donations are usually capital in nature. Donations are usually not revenue. If in case they specifically mention that this much of donations are revenue in nature, treat them as revenue. Then I'll take it in my income and expenditure as income. Otherwise, donation would go to balance sheet on the liability. You can write it either separately like this or you can add it to capital fund. Either ways, it is okay. Then after this 15, I have life membership fee received. I have received life membership fee of rupees 35,000. This 35,000 will become my liability because life membership means once I take the money from these people, I'm going to give them access to the facilities from my club forever. So after I write capital fund in my closing balance sheet, which I don't know yet, which I'll find using my opening balance sheet. To this, I will add life membership fee of 35,000. If I take subscription from you for every year and then provide you services at my club, that will be my income. If I take subscription once and I give you access for lifetime, that is life membership. That should be added to capital fund. That should not be returned to income and expense. Why? That is donation in lump sum. I'm going to give you service for next 25 years. How can I write it in current year income and expenditure? If the club gives a policy that it is expected that the member will be alive for next 10 years, then 1/10 of it will be returned to income and expenditure every year. But if they don't mention anything, straight away add it to capital fund. What do we have after life membership? 35. Then we have with us to sale of furniture at book value 5,000. 5,000 rupees worth of furniture is sold. I told you we need to open one furniture ledger. In my furniture ledger, on the credit side, I'll write receipts and payment, sale 5,000. Have we made any profit or loss on sale? I don't know. We might have made some profit. I don't know whether we made or not. Right now, we'll just keep it empty. We might have actually made some profit on sale of furniture. I don't know. 5. Next, entrance fees of rupees 10,000. Have they given any adjustment on entrance fees? No, we did not come across any adjustment. Entrance fees in this case where they've not mentioned anything can be either treated as income in income and expenditure or treated as capital fund and then add it to our capital. Which assumption is right? Either of it is fine. You can write it as income, but I am adding it as entrance fee to be capitalized. I'm making this assumption. Is it right to write it as income? Absolutely yes. The only reason why I'm adding it to capital fund is ICAI has done this. So I'm following the similar assumption. If in case you end up writing it as income, your answer will not go wrong. Your excess of income or expense will become more. That will get added to capital fund. Balance sheet will tally at the same amount. Yes, your surplus will change, but it is okay. You will be given full marks even if you make such assumption. I've added it to capital fund directly because institute has followed this assumption. What do we have after this? Interest on 10% investments for full year that is received to the extent of 20. Here, you need to be careful about two things. One, interest is income. I'll write it in income and expenditure. Next thing is, if you received interest 10% and the amount is 20,000, 10% interest is 20,000. 100% of the investment is not 20. How much is it? 20,000 divided by 10%. That becomes 2 lakh. So the investment is 2 lakh. Interest on it 10% is 20. So 2 lakh should become asset. They have not told anywhere that the investments are sold or purchased. If they would have given on the payment side, it is purchased. If they would have given on the receipt side, then it is sold. So nowhere they mentioned anything about investment. Observe if you want. So what do I say? This investment was there last year also. This investment is there this year also. So don't forget to write investment of 2 lakh in the opening balance sheet as well as closing balance sheet. Without fail, without forgetting. write 2 lakh rupees investment in both opening and closing balance sheet. Come on, let's write that. In the income and expenditure account as an income, I'll write interest on investments 20,000. And in my balance sheet, I would write 10% investments 2 lakh. This closing balance sheet. Similarly, in the opening balance sheet, I'll write 10% investments 2 lakh. It is an asset on the opening date as well as on the closing date because no investment is purchased or sold during the year. On 2 lakh rupees, 10% interest will become 20,000, which is my income in income and expenditure rightly recorded. Then I have with me match fund 40. Usually any expenditure incurred to conduct the match will be written in P&L account credits, P&L account debit side. But if there is a specific fund which is raised, any expense will be deducted from the fund. Any income also should be added to the fund. So match fund is 40. This match fund received is like a donation. In my balance sheet, I'll write match fund. I don't know how much is opening, but I know donation received during the current year is 40. So I'll write match fund opening, don't know, space, add donation received during the year 40. Any match expenses will be deducted from this. But match fund cannot become negative. Let's say opening fund is 0. Donation received is 40. 45 incur 45,000 for match expense. You cannot write fund as minus 5. You deduct only 40,000 from the fund. 5,000 incurred over and above the fund will appear in income and expenditure as expense. But what if you incur 32,000 as match expenses? From 40 you deduct 32,000 match expenses. Write 8,000 as closing donation. I hope you all understood. Next, after match fund 40, we have donation for building fund. How much is this? 45. We are constructing one building for our sports club. To construct the building for our sports club, I've collected 45,000 donation. So what would I do? In my balance sheet on the liability side, I will write building fund. Do we know how much is the opening building fund? Don't know. To this existing building fund, I'll add 45. If there is opening building fund, I'll add it to 45. I'll add that 45 to that. If not, I'll write 45 only as my closing building fund. What's after building fund? When I have sale of newspapers 2,500 expense in my income and expense, I'll write expense, income, sale of newspapers, income 2,500. I've sold newspapers, old newspapers, Raddi, Gujri, Kabadi. My salary is 14,000. Expense, payment is equal to expense. There is no outstanding, there is no prepaid. If they had given some adjustment, there would have been prepaid or outstanding. What's after salary is 14? We have match expenses. How much is match expenses? 28. Usually by default, 28,000 match expense would have appeared in income and expenditure as expense. But because we have match fund, 28,000 of match expenses will not be deducted in your, will not be debited to your income and expenditure expense. But in my balance sheet, from my match fund, I'll deduct match expense 28. If opening is 0, 40 minus 28, 12 will appear here. If opening is 10, 10 plus 40, 50 minus 28 will appear here. Right now, I don't know. I'll leave it like that. Then I have sports material. Payment if you have made for sports material, it is like purchase of sports material. How much sports material did you buy? 15,000. We need to open one sports material ledger. I've given a star there. In your sports material account, debit side will write 2 receipts and payment 15. This is purchase of sports material. You literally paid money and then purchased sports material. In sports material account on the debit side, 15,000. What's after this? Then we have printing and stationery, 12,000. This is expense. I will write it in my income and expenditure as expense. But there is one star. What does it mean? This was simple one. You don't have to open ledger. There is some outstanding printing and stationery expenditure. Once you add that, we'll write it to outer column. For now, keep it as 12. What's after that? Then we have honorarium 5,000 rupees. Honorarium 5,000 rupees is expense, paid. Write it in your income and expenditure on the expenses. Honorarium 5,000 rupees. Then we have furniture. You made payment for furniture, which means you have purchased furniture by 15,000. In your balance sheet, on the asset side, furniture should appear. But 15,000 is not the opening furniture balance. It is purchase made. I think we opened a ledger. In the furniture account, I'll write 2 receipts and payment 15 here. I don't know my opening. To opening, I'll add 15,000 purchase. I'll deduct sale. I'll deduct depreciation if any, and then find the closing furniture. That will appear in my balance sheet as asset. What's after furniture? we have magazines and journals. Magazines and journals is 10,000. Magazines and journals of 10,000 will appear in your income and expenditure as expense. Magazines and journals 10,000. End of the story. Easy. After magazines and journals, books 35,000 rupees. Books are purchased to the extent of 35. I'll open one ledger called books ledger. On the debit side, I should write opening balance, which I don't know, but I've purchased books to the extent of 35. In receipts and payment, it is buy books. In books account, it is two receipts and payment. Amount is 35,000. What's after this books 35? Municipal taxes 6,000. There is an adjustment for this also. I don't want to open ledger. 6,000 is payment, 6,000 is expense. Into 3 by 12, you do whatever comes, that is opening balance sheet asset, closing balance sheet asset. That's the end of the story. But for those who don't understand it, if I tell that fast, I'll slowly teach it to you also. In municipal taxes account, I'll write debit side to, to receipts and payment by municipal taxes. Yeah, that's correct. This is to receipts and payment. How much is paid? 6,000. In municipal taxes, I've written 2 receipts and payment 6,000. I'll later teach you the adjustment. Don't worry. Balance carried down 80,000. This is the closing cash and bank balance. This will write it in my balance sheet as asset. Closing balance sheet. This is my closing balance sheet. I would write cash and bank balance 80,000 as asset. By this, I'm done with my receipts and payment. Now I'll go to adjustment one at a time. Subscription due. These are all on 1st of January. Opening balance 3,000 rupees is opening subscription due. Come to our subscription account. 3,000 rupees is subscription due for last year. Now you observe 3,000 was outstanding for 2024. In that 2,000 is paid. How much is still outstanding for 2024? 1,000. Don't forget this. This is the important part. If you would have straight away written this 2 year, it would have been wrong. So 3,000 is the opening subscription. In that 2,000 rupees is received. 1,000 is still outstanding. This 3,000 will appear in my opening balance sheet as asset. In my opening balance sheet, I would write subscription due 3,000. 1,000 is subscription due, but this is not the only amount of subscription due. There might be some subscription due for 2025 also. Who told that entire 2025 subscription is received? We will write that also in the inner column, totally to outer column, and then write it to balance sheet. For now, ignore. Come to next item. Furniture 10. This is the opening balance of furniture. This I would write it in my opening balance sheet. This is my opening balance sheet. I'll write furniture 10,000. I need to find the closing furniture. For that, I open one furniture ledger. Debit side, I'll write 10. Opening is 10. I purchased 15. 25 should be there. In that 5 is sold. Closing is 20 if there is no further adjustment. If there is depreciation, I might have to do. You might wonder, sir, why did you open ledger? You could have straight away written in balance sheet inner column. You need to understand. In this question, it might be simple. 10 plus 15 minus 5. There is no depreciation. What if they had given depreciation adjustment? And what if they told that purchase happened on 1st of July? Then you had to depreciate 10,000 separately, 15,000 separately, and then find the closing balance. So many things you can't do in inner column of balance sheet. There are limited things that you can do in inner column of balance sheet. What a lot of you think is, by doing an adjustment in the inner column of balance sheet, you will save time. Actually, no. Adjustment is adjustment. It will take the same amount of time. You feel you've taken less time because you wrote inner column. Instead, open a separate ledger and write. 2 advantages. Number 1, balance sheet will look clean. Number 2, if you do some error, balance sheet is still clean. Error happens in working note. Working note can be redone, balance sheet will be correct. If you do error in the balance sheet only, then gone. Please don't risk. Write it separately. You're not going to save any time. In fact, you will end up spending 3 months extra if you try to take shortcut. Yeah, in the CA Foundation examination or at CA Inter or any level of examination, you are supposed to write the answers correctly, not quickly. First badre ಗೆಲ್ಲು ಕೊಡೋದು ಕಪ್ಪು, pass ಆದರೆ ಕೊಡೋದು marks card. CA exam, they'll not tell who gave first. Will be given 10 marks extra. No. If you take full 3 hours but you write correct answers, you'll be given full marks. So remember, it's not a running race. 10,000 furniture written in furniture account as well as in my balance sheet asset side. Then we have with us books of 20,000. books of 20. In my books account, I'll write opening balance 20, and I'll also write this 20,000 in my balance sheet on the asset side, books 20. Books 20. Then building. How much is building? 1,25,000. Building of 1,25,000 is asset in my opening balance sheet, and I would have to write it in my closing balance sheet also. There is no adjustment for building, no depreciation, nothing given as it is. Books I would have to adjust and then write. Furniture I would have to adjust and then write. So I've kept it without writing the closing balance. Then we have stock of sports material. Closing stock of sports material 4,500. In my closing balance sheet, I'll write sports material. Oh, closing is 4. No, sorry. This is opening balance 4,500. Sorry. In my opening balance sheet, I will write sports material 4,500. And we open ledger. And in this ledger is where we'll find our closing sports material. In the ledger, I'll write debit side to balance brought down 4,500. Later, I'll find the closing balance and write it to my balance sheet. Understood? Then what do we have? Creditors for printing 2,500. This is actually not creditors. Don't treat it as a creditor and then open a ledger. Creditors means you owe them. You haven't paid them. It's a liability. How much is your liability? 2,500. 2,500 rupees worth of printing and stationery expenditure is incurred but not paid. So 2,500 rupees will be added to our expense. Here in our P&L, income and expenditure, we have printing and stationery. I'll add, this is opening creditors. Opening creditors. Last year's outstanding paid this year. I have paid 12,000 rupees. In that, 2,500 is actually paid for last year. So current year expense is only 9,500. And 2,500 was opening outstanding from last year. So it's a liability in the opening balance sheet. This is my opening balance sheet. On the liability side, I'll write creditors for printing and stationery 2,500. Outstanding from last year, paid in current year. Just because you paid it in current year, it's not current year expense. What's after that? Then we have with us, a club has 1,000 members and 50 rupees per member is a subscription. Either they pay or they don't pay. This is my income. 1,000 members, 50 rupees per member. In my income and expenditure account, I need to write on the income side. By subscription, 1,000 members into 50 per member, which comes to 50,000. And this 1,000 into 50, 50,000. In income and expenditure, I write by subscription. In subscription account, I should write to income and expenditure. 2025, 1,000 members into 50. How much is it? 50,000 is my income. Out of 50, I should have received everything. If I don't receive anything, either it should have been pre-received in the past or it will become closing outstanding. We will find it later. But for now, you understood, no? Current year subscription income is 50,000 and 50,000 is supposed to be received but not yet received. Let's proceed. 20 members paid their subscription in advance for 2024. 20 members have paid their subscription in advance in 2024. So current year is 2025. 20 members paid this 2025 subscription last year only. So it is pre-received subscription. How much is pre-received subscription? Pre-received subscription is liability. We have received in 2024 for the year 2025. 20 members into 1,000 comes to, 20 members into 50 per member comes to 1,000. Can I say 1,000 rupees, which is current year subscription money, was already received last year? Last year, meaning opening balance sheet, I would have to record this 1,000 as liability. In my opening balance sheet, on the liability side, I'll write pre-received subscription 1,000. Observe, current year subscription income 50. In that, how much was already received in previous year? 1,000. Balance 49 has to be received here. If it is not received, it will become closing outstanding. Let's anyway see it and then write it later. What's after this? Then they told, in year 2025, subscription was received in advance from 15 members. So current year, 2025, 15 members have paid next year subscription already. So in receipts and payment of 40, 2024, 2026 is also there. How many members? 15 members. 15 members into 50, that comes to 750. So 15 members have paid their share of 50 rupees per member, 750 rupees in advance for the next year. Now only they paid. 750. So this 750, whatever is received, will become closing pre-received for 2026. 750. This you should not forget. This I have written as receipts and payment here 750. This 750 is closing liability. In my balance sheet on the liability side, in the closing balance sheet on the liability side, I would write here, this is that pre-received subscription 750. Pre-received subscription 750 rupees. Received for the year 2026 in the year 2025. I can feel like I'll close my subscription account now. Don't do it. We'll do it later. Go with the order of the adjustments. We'll come back and then close the subscription account later. Municipal taxes is paid on 1st April every year. How much have I paid in municipal taxes during the current year? Come to municipal tax account, 6,000. 6,000 is paid during the current year. It is paid current year. It is paid during current year. Out of this, there is some amount which is paid for next year. How much is paid for next year? 3 months. Because it is paid from April to March. But our year is January to December. When you pay in April 2025, it's paid till March 2026. But year ends on 31st December 25. January, February, March of 2026, we prepaid. How much have we prepaid? 6,000 into 3 by 12. That is 1,500. If you paid 1,500 in advance for next year, last year also we would have paid advance for current year. That is also 1,500. So if you identify balancing figure, 6,000 will become income and expense by income and expenditure. So this is current year income 6. So 6 is paid, expense. But in that 6,500 is paid for next year. And last year we paid 1,500 for current year. 1,500 will appear in opening balance sheet as asset. 1,500 will appear in closing balance sheet as asset. 6,000 I have recorded as expense in my income and expenditure. 6,000 is payment in my receipts and payment. Simple. Come on, let me write 1,500 in my opening balance sheet and closing balance sheet. Opening balance sheet 1,500 prepaid municipal tax. Closing balance sheet 1,500 prepaid municipal tax. And in my income and expenditure, municipal tax expenses is 6,000. We're done with municipal tax. Actually, like I mentioned, there is no need of the ledger account for this. You just have to write 1,500 asset in opening and closing balance sheet. What's after this? One member donated billiards table worth 50,000. So in the balance sheet, on the asset side, I will write one new asset. What is the name of that new asset? Billiards table 50. I did not pay money. If I would have paid, my cash would have decreased. I received it as donation. That will be recorded as donation. Billiard table, donation 50. So it's not my money that I've used to buy. Billiard table became asset because I did not pay the money. That will be recorded on the liability side as donation for billiards table 50. What is the next adjustment? Books were worth 46,000. On 31st December 2025. Closing balance. In the closing balance sheet, books is 46,000. I'll write the same in the books ledger that I've opened. I opened one cute ledger for books. I will write here balance carried on 46. Opening balance of books is 20. Purchases made is 35. Book should become 55, but it is 46. 46 and 55 difference. 4 plus 5, 9,000. Depreciation on books. I should write in the credit side by income and expenditure. And in the income and expenditure, I should write debit side as expense. But I'll not write it right now. We'll do it after we finish all the adjustments. Then we'll close the ledger. Right now, I'm still doing the question in the order of items. What is the next item in the question? After books, they told stock of sports material is 4,000 closing. Okay. Have I opened sports material ledger? I think yes. Closing balance, I'll write on the credit side 4,000. Opening was 4,500. Purchase is 15. Can I say closing sports material should be 19,500? But we have only 4,000. From 19,500, if I deduct 4, 15,500 worth of sports material is sports material consumed which will become expense in my income and expenditure. But I will not write it right now. I'll write it later in the order of closing ledger. I'll write closing balance of 4,000 sports material in my balance sheet, closing balance sheet as asset. How much is that sports material? Here it is, 4,000. I written the name, but I have not written the amount. Now I'll write the amount. Next, yay, all adjustments are done. All that I need to do now is very simple. Close one ledger at a time. Income and expenditure will be closed at the end to find the surplus which will be added to capital fund. To find capital fund, I need to close this. But don't close this. First close all other ledgers. Subscription. Simple shortcut for any ledger in NPO. Remember, opening balance, receipts and payment, income and expenditure, closing balance. These are the 4 items that will be there. Opening, closing, R&P, I&D. 3 will be there. 1 will be balancing figure you need to find. In this question, receipts and payment is given. So opening, closing, receipts and payment will be there. Income and expenditure is balancing figure. See here, in this question, 2024 you are supposed to receive 3,000. You have received 2,000. 1,000 is still outstanding. 2024 column is closed. Close it year wise when it comes to subscription. 50,000 is current year subscription income. In that, 1,000 was already received. How much is received here and how much is yet to be received? You would have to find it. Very easy to find. Total receipts is 40. In that 2,000 is for 2,000 rupees. Sorry, 2024, 2,000 rupees. 2026, 750 rupees. What belongs to 2025 is 40 minus 2,000. Sorry, 40 minus 2,000 minus 750. How much is that? 40 minus 2, 38. 38,000 minus 750 is 37,250. 37,250 is the extent of money received for 2025 subscriptions. 2025 year, income is 50. In 50, 1,000 was received last year. In 50, 37,250 is received current year. How much is not received? 50,000 minus 1,000, 49,000 minus 37,250. 50,000 minus 1,000 minus 37,250. Can I say that comes to be 11,750 is the extent to which it is not yet collected. So closing outstanding is 12,750. Now check the total of the ledger. It has to tally. Always remember to tally subscription account year wise, not in total. If you do it in total, damar. Year wise you total and check the totals, it should match. 41 plus 12,750 is 53,750. Here also you get 53,750. This 12,750 closing balance sheet asset. In my closing balance sheet, I would write subscription outstanding 12,750. And I've already written 750. I've already written 3. I've already written 1,000. See, 1,000 and 3 already written. And here also I've written 750, 12,750. Income for the year is 50. That 50 is also written in income and expenditure as subscription 50. By this, I've closed my subscription ledger. Tallied. Then come to furniture. 10 plus 15, 25. 25 minus 5, 20,000 is closing balance. Sir, depreciation, they have not given. So assume that there is no depreciation. They have not given, so assume that there is no depreciation. Furniture closing balance 20. In my balance sheet, which is closing, I'll write furniture. How much? 20. Furniture done. Then next ledger, sports material. 4,500 plus 15, 19,500 minus 4. You will have 15,500 as consumption of sports material. Consumption of sports material in sports material account I have written by income and expenditure. In income and expenditure account, I would write to sports material consume 15,500. By this I am done with sports material. Sports material ledger is also closed. Come to books. Opening balance of books 20. Purchased 35. Together 55. 55 minus 46. 4 plus 5. 9,000 is like depreciation on books. In books account I have written by income and expenditure. In income and expenditure account, I would have to write to depreciation on books 9,000. By this I have closed my books account also. Come down. We're done with subscription ledger. We're done with furniture ledger. We're done with sports material. We're done with books. Then come to municipal taxes, which is already done. Everything's done. Last working note account to be closed. Basically statement, balance sheet. Identify capital fund. 10 plus 20, 30, 30 plus 125, 185, 185 plus 4,500 plus 2 lakh plus 7,500 plus 3,000 plus 1,500. 3 lakh 71,500. From that, deduct 3,500, you get 3 lakh 68,000 as capital fund. 3 lakh 68,000 is opening capital fund. In my closing balance sheet, I'll write 3 lakh 68, whatever I found here. Now I need to add my current year surplus or deduct my current year deficit. How do we get that? Income and expense. Come to income and expense. 20,000 plus 2,500 plus 50 becomes 72,500. From 72,500, deduct 14, 9,500, 5,000, 10,000, 6,000, 15,500 and 9,000. You will get surplus as 3,500. This surplus of 3,500 will be added to capital fund here. To 3 lakh 68 plus 35 plus 10 plus 3,500. You will end up getting 4 lakh 16,500 as my capital fund. 4 lakh 16,500 plus 15. Here 48. Opening match fund is 0. 48 minus 40 minus 28 is 12. Opening building fund is 0. So building fund total is 45. Take the totals. 416,500 plus 15 plus 12 plus 45 plus 750 plus 50,000. 5 lakh 39,250 is liabilities. Assets 20 plus 46 plus 125 plus 2 lakh plus 80 plus 4 plus 1,500 plus 50 plus 12,750. 5 lakh 39,250. By this the balance sheet tallies, and this is the end of accounts of our not for profit organization. Let's now solve question number 11 from our Jan 2026 RTP for CA Foundation Accounting. This question number 11 is on the topic of incomplete records, or what we call as single entry system. This is about Deep Enterprises, who maintains its books of accounts under single entry system. They've given the balance sheet, though it's still something that we can call as statement of affairs if they're still following single entry. We can call this balance sheet only if they've converted the single entry records to double entry records in the previous year. Let's come to the end of the question. Let's see what have they given us and what are they asking from us. Following is a summary of cash book and bank book. Okay, they've given previous year balance sheet, they've given cash book, bank book details. They've given a lot of adjustment relating to discount allowed to trade debtors and received from trade creditors. I'll make a marking in my previous year balance sheet. There is an adjustment regarding trade debtors. There is also an adjustment regarding trade creditors. I'd open a ledger for trade debtors and trade creditors to adjust this. Then there is an adjustment on fire insurance premium, and next to fire insurance premium, which is paid, prepaid is there in the previous year, and in the cash book also there should be some payment. There is, I think it's part of sundry expenses. I'd include them all and then prepare one cute ledger to identify the expense for the year, including fire insurance premium. What else do we have after this? Furniture and fixtures is to be depreciated at 15%. In my balance sheet, I would mark furniture and fixtures. This I would depreciate. Then we have stock. This is closing stock, which would come in trading account credit side as well as balance sheet asset side. Trade debtors is available. We'll open a ledger for debtors, and this outstanding expenses will come as a part of the ledger that will open for expenses, including the fire insurance premium, opening prepaid, closing prepaid. All of that will get sorted in the same ledger. GP is to be maintained at 10% on total sales, and they want us to prepare trading, P&L as well as balance sheet. So this is a clear-cut question of conversion of incomplete records to double entry system. That is conversion of single entry to double entry. We'll open trading PL balance sheet. Add-on will be the ledgers which is required based on the adjustments in the question. Come, let's begin from the start. Start from the beginning. Take these items and write it to the respective place. Capital, whatever is given in the opening balance sheet, will go to our closing balance sheet. This is trading PL followed by balance sheet of Deep Enterprises. On the liability side in the balance sheet, I'll write capital 3,37,500 taken from the opening balance sheet on the liability side in the inner column, being written in the inner column for a reason that we'd have to deduct drawings if there is any, we'd have to add net profit if there is any, and then we'll identify the closing capital balance. What do we have after that? Next we have with us trade creditors. I'll open a ledger, write 3,78,750 as opening balance. This is my trade creditors ledger. Because it is a liability, opening balance of 3,78,750 will come on the liability. I'm going to say the credit side. Then outstanding expenses. I'll open another ledger for expense. Outstanding expense being a liability, it will be written on the credit side by balance brought down 33,750. Expense account by balance brought down 33,750. Later I'll write the expense paid, prepaid if there is any closing outstanding, and then I'll find the current year expense as balancing figure to be posted to P&L account. What do we have after expenses? Then we have furniture and fixtures. This is my asset. I would write it in my balance sheet on the asset side. Furniture and fixtures to the extent of 75. It is in the inner column because I would have to deduct depreciation on the same. What do we have after 75? Stock of 4,57,500 is actually opening stock. So we'll go to our trading account on the debit side. I'll take you all to my trading on the debit. Opening stock 4,57,500 rupees. Done. What do we have after that? After opening stock, we have trade debtors 1,56,000. Trade debtors of 1,56,000. I'll open a ledger called trade debtors. Debtors being asset, I'll write on the debit side 2 balance brought down 1,56,000. Then prepaid insurance. It is asset, and asset opening balance will be written on the debit side. In the same expense ledger, I would write 1,500. Or you can choose to open a new expense ledger called insurance premium account. I would write it in another one. Insurance premium account. On the debit side, I would write balance brought down 1,500. Then cash in hand 60. I don't have to open cash and bank account because it's already given. Whatever 60 is given here as the opening cash balance is already taken here in the debit side as opening balance. I'll take care of all other receipts and payments and then post them to the respective ledger. Come on, let's go to the next one. We're done with this. I'll go to the payment slightly later. I'll finish the receipt side. Then I have with me cash sales of 55,35,000. Cash sales would appear in the cash account on the debit because cash is received and that's a receipt. And I would have to write this in my trading account on the credit side under the heading sales. Sales is two things in my trading account. One, cash sales. Second one, credit sales. I right now know my cash sales is 55,35,000. That's what is given here. I would write credit sales later once I close my debtors account. When I close my debtors account is when I'll find my credit sales. Then I have here receipts from trade debtors 13,87,500. When the money is received from debtors, the journal entry is cash or bank account debit to debtors. In my cash or bank account, it's already written on the debit side to debtors. In my trade debtors account, I'll write on the credit side by cash 13,87,500. By this, I've finished the receipt side of my cash book. Now I'll come to the payment side. To begin with, I have payment to trade creditors 62,41,500. I've already opened a ledger called trade creditors account. When I make payment to creditors, the journal entry is creditors account debit to bank. In bank account, I've already written by trade creditors. In trade creditors account, I'll write debit side to cash or bank account 62,41,500. Once I read the closing balance of creditors, I'll find the credit purchases as balancing figure here, and that would go to my trading account as purchases. What do we have after this? We do have sundry expenses paid to the extent of 4,65,525. Entry is expense account debit to cash. In cash account, I written by expense. In expense account, I'll write to cash. How much is paid? 4,65,525. Then drawings to the extent of 1,80,000 is reduction of capital, and it also reduce your cash. Journal entry is drawings account debit to cash. So in the cash account, I've written by drawings, and now drawings has to be deducted from capital. I'll go to my balance sheet. Capital, which is staying in the inner column, from that I would deduct drawings of 1,80,000. What do we have after this? We finally have closing cash balance of 95,475. This is my asset. I would write in my balance sheet as asset 95,475, and it is part of my cash and bank account on the credit side as closing balance. That is anyways written. I'll write this here. By this, I'm done with my receipts and payment or cash book also. Now I have this 1, 2, 3, 4, 5 adjustments to take care of. Once I take care of them, I am actually done with my trading P&L and balance sheet under incomplete records. Let's see. Discount allowed to trade debtors and received from trade creditors amounted to 27 and 21,250. Discount allowed is 27,000. Discount received is 21,250. Let me now focus on discount allowed. When I allow discount, my debtors will decrease. So debtors account will be credited. Discount allowed being expense, it will be debited. Journal entry is discount allowed account debit to trade debtors. In my trade debtors account, I'll write by discount allowed 27,000. This being expense, this will be later transferred to PL. Entry is P&L account debit to discount allowed. So in my P&L account, this is my trading till here and this is my P&L account here. Here I would write to discount allowed 27,000. Similarly, we have received discount of 21 to 50. 21 to 50 discount received is income and my liability creditors is reducing. Creditors is a liability reducing, debit creditors. Discount received is an income, credit discount received. Journal entry would be creditors account debit to discount received. So in my trade creditors account, I'll write to discount received 21 to 50. I'm not opening discount received ledger, but the following entry is discount received account debit to P&L. That is to transfer the discount received income to my P&L. So in my profit and loss account, on the credit side, I would write by discount received 21,250 rupees. Discount received income credited in PL. What do we have after that? Annual fire insurance premium of rupees 4,500 was paid every year, but it is paid on 1st of August every year. So when I pay on 1st of August, I am paying for the period starting 1st of August till 31st of July next year. However, my year ends on 31st March. I paid it from August 1st to 31st July, but my year ends on 31st March. So I paid for April, May, June, July, 4 months prepaid. So I paid 4,500 and that 4 months amount is prepaid. So 4,500 into 4 divided by 12 is prepaid insurance amount. Let me take it. In my insurance premium account, on the debit side, I would say not 2 cash. I'll write 2 expenses. I paid 4,500. In the expenses, whatever 465, 525 is paid, in that it already includes insurance of 4,500. I'll eliminate it from expense and I'll write it in my insurance premium. So opening prepaid was 1,500. I have paid last year also in August, but this year I'm paying in August again. So when I paid in August last year, it was till July end this year, meaning this year's April, May, June, July, 4 months of insurance premium was actually paid last year only. Same thing, yeah. Whatever is closing prepaid will be opening prepaid. Anyways, let's check. Observe. Balance carried down. So we paid from this August till next July. My year ends in March. So April, May, June, July. 4 months of insurance premium I paid in advance. 4,500 into 4 by 12 comes to 1,500. So last year I paid 1,500 of this year. This year I'll pay 1,500 of next year. So opening prepaid, closing prepaid will match. This 1,500, whatever is there here, closing prepaid, will appear in my balance sheet as an asset. Prepaid insurance 1,500. Same 1,500 is there in last year balance sheet also, if you observe. Same 1,500 is there in last year balance sheet. Same 1,500 will be there in this year balance sheet also. Later I'll close my insurance ledger to find profit and loss, but don't close any ledger now. Keep all the ledgers open. Once you finish all the adjustments, only then go to closing the ledgers. The next item that I have, furniture and fittings were subject to depreciation at 15% per annum. Let's depreciate furniture and fittings by 15%. Come to balance sheet. Balance sheet, furniture and fittings 75,000. Less depreciation at 15%. 75,000 into 15% is 11,250. From 75,000 deduct 11,250. You will get 63,750 of furniture and fixtures. And 11,250 whatever is depreciation expense should be written in our P&L account on the debit side as expense. I would write here depreciation on furniture 11,250. The journal entry is depreciation account debit to furniture, then P&L account debit to depreciation. I hope you all got this. What do we have after that? Closing stock 4,87,500. In my trading account on the credit side, closing stock 487,500. Further, this being asset, it should be written in my balance sheet on the asset side, stock 4,87,500. Next item, trade debtors closing balance 1,71,500. Same thing. I would write in my balance sheet as asset 1,71,500. Next, in my trade debtors account, I would write by balance carried on 1,71,500. I'd find my credit sales as balancing figure in my trade debtors account. And that credit sales will appear in my trading account on the credit, find the total sales, using which I'll find GP as a percentage. And then GP will help us find NP, NP will help us find closing capital, which will ensure balance sheet will tally. Let's proceed. What's after trade debtors? Outstanding expense 27,600. This much of expense is yet to be paid. In our balance sheet, it's liability. Trade expenses or outstanding expenses 27,600. In my expenses account, it being a liability which has closing balance, it will be written on the debit side to balance carried down 27,600. What do I have after that? Gross profit is maintained at 10%. That's it. All the information is there. Now I'll close one ledger at a time and then find GP, like I mentioned. So don't touch trading, don't touch PL, don't touch balance sheet, come to trade creditors. There is opening, there is cash, there is discount. Two things are missing. One, balance carried on is missing. Two, purchases is missing. So creditors ledger cannot be closed. Why? There are two things to be found. One, closing creditors, which is not given in the question, unlike debtors. They have also not given us credit purchases. So because two items are missing, I can't close this ledger now. I'll keep it pending. We'll close it later. Then come to expenses. We have opening, we have closing, we have paid, we have insurance, everything. Balancing figure will be PL. Total on the debit 493,125. Total on the credit 493,125. Balancing figure is current year expense by P&L 4,54,875. In expense account I written by PL. In P&L account I'll write two expenses 4,54,875. Come to P&L account. On the debit side I'll write two expenses 4,54,875. This becomes my expenses for the year. Paid, not paid, I don't care. Expense. So by this, trade creditors account is not closed, but expense is closed. Come to trade debtors. There is opening, there is discount, there is cash, there is closing balance. Missing figure is sales. Shall we find sales? It's simple. 13,87,500 plus 27 plus 1,71,500 comes to be 15,86. From that, if I deduct 1,56,000, I'll get I'll get sales of 14,30,000. This is not total sales. This is only credit sales. If I write this 1430 in my trading, add it with cash sales, then I'll get closing sales. So then I'll get total sales. Let me take 14,30,000 to my trading account. Write credit sales as 14,30,000. I'll get 69,65,000 as total sales. Now we know we couldn't close our creditors account because we knew opening, we knew discount. We did not know purchase as well as closing. Now in trading account, I have opening, I have sales, I have closing. On sales, if I put GP percentage, I'll get GP. I have everything in my trading except purchase. I'll find purchase as balancing figure. And there can be cash and credit both, but in this question, there is no cash purchases. Why? If it is cash purchase, goods are purchased and cash is paid immediately. If the cash is paid, it will appear in my cash account on the credit. They have given cash and bank account and nothing on the credit side, meaning nothing is paid. So entire amount can be taken care of. Let's say entire amount is credit purchases only. That will go to creditors account and we'll find closing creditors as balancing figure there. Shall we do that? Help me. How much is gross profit? 10% of sales. That is 69,65,000. Can I say 6,96,500 is GP? Total on the credit becomes 74,52,500. I'll write the same on the debit. My purchase balancing figure, and I have no doubt that this purchase is obviously credit purchases only. Like I mentioned, there can't be cash purchase. Sir, what if there is cash purchase but they did not pay money? If they don't pay money immediately, that becomes credit purchase. And I would write here GP brought down to the extent of 6,96,500. And let me write purchases of 62,98,500 in my creditors account on the credit side. Because the journal entry is purchase to creditors. In creditors account, I have to write by purchase. I have everything in my trade creditors. I can close this now. 66,77,250 total on the credit. If I write the same on the debit, I'll get balancing figure, closing balance 4,14,500. This being my trade creditors closing balance, I'll post this to my balance sheet liability side as 4,14,500 rupees. I'm done with my trade creditors. I'm done with my expense. I'm done with trade debtors. Last ledger to be closed, insurance premium. I have opening, I have payment, I have balance carried down. Balance in figure will be PL. 6,000 debit, 6,000 credit, 4,500 balancing figure is the current year insurance premium expense to be transferred to PL. In insurance premium account, I have written by PL. In P&L account, I'll write insurance premium 4,500. Everything's done. GP is also brought to PL. What should I do? Total the credit side, write it on the debit side, identify net profit. 696,500 plus 21,250 gives us 7,17,750 as the total on the credit. If I write the same on the debit, my gross profit plus discount received minus discount allowed, depreciation expense and insurance expense, which gives me net profit of 2,20,125. This 2,20,125 of net profit will be added to my capital. 3,37,500 is my capital. 1,80,000 is drawings deducted. 2,21,25 is net profit to be added. We'll get the closing capital as 3,77,625. To this 3,77,625 capital, if I add 27,600 and 4,14,500, I'll get total on the liability side as 8,19,725, and on the asset side, if you do 63,750 plus 95,475 plus 1,500 plus 4,87,500 plus 1,71,500, you get total on the asset side as 8,19,725, which tallies our balance sheet. And this is conversion of single entry into double entry system. Solution to our question number 11. Trading PL, balance sheet, creditors and expense ledger, debtors and insurance premium, and that's the end. Let's now start question number 12 from our Jan 2026 RTP for CA Foundation issued by the institute. And this question number 12 is on partnership accounting, but they've not asked you to do a full-fledged revaluation, partners capital, and then cash or bank account or balance sheet based question. This 12th one is on computation of goodwill. Let's quickly solve this. Sita, Geeta, and Rita. There are three partners. They're in partnership sharing profits as well as losses in the ratio 2:5:3. So it is 2 plus 5, 7, 7 plus 3, 10. So Sita is getting 2/10, Geeta is getting 5/10, and Rita is getting 3/10 of the profits of the company, of the profits of the partnership firm. The balance sheet of the partnership as on 31st of March 2025 is given. What do they want you to do? Partnership earned profit of 6 lakh during 24-25, and partners have withdrawn 4,50,000 during the year. Normal rate of return is 30%. They want you to find the value of goodwill on the basis of 5 years purchase of super profit. Oh, they want you to compute goodwill under super profit method. Under super profit method, goodwill is computed like this: super profit multiplied by 5 years purchase. So the goodwill formula is goodwill is equal to super profit multiplied by number of years purchase, which in this case is 5. In this question, number of years purchase that we're taking is 5 because it's mentioned in the question. What does this number of years purchase signify? Number of years purchase signify the period for which the customer will come back to the same business, because of which you get to sell, because of which you get to earn profit. Right now we don't know super profit. Then we would have to compute super profit. Super profit is computed as adjusted average profit or future maintainable profit minus normal profit. What is the profit that everybody earns? And what is the profit that I earn? Whatever I earn more than what others earn is super profit. If others can earn 10,000 rupees every month, if I earn 12,000, that 2,000 extra what I earn is my super profit. This super profit, whatever I compute for a year, multiplied by number of years for which I can continue to earn that extra profit more than my competitors, is my goodwill. So I'll first see how much profit is everybody in the industry earning, how much of the profit am I earning, how much am I earning more than others will become my super profit. That super profit multiplied by how many years can I earn more is number of years purchase. Once I multiply, I'll get goodwill. Next, how to find adjusted average profit? Adjusted average profit in the present question, they've told you to, okay, normal profit is to be found based on average capital employed. Adjusted average profit is the current year profit. They would have given current year profit, say 6 lakh. That is the adjusted average profit. There are no adjustments. 6 lakh is the adjusted average profit. Then we will find super profit as adjusted average profit, which is 6 lakh minus normal profit. How are we going to compute normal profit? Normal profit is capital employed multiplied by normal rate of return. What is the capital that I have employed multiplied by the rate of return everybody gets? So how much capital have I invested multiplied by rate of return what everybody in the industry is earning? If I multiply, I'll get normal profit. If I'm earning more than that normal profit, that is super profit. And to compute that normal profit, I told you we need to do capital employed multiplied by NRR. NRR in the question is 30%, but capital, they don't want you to take closing capital. They want you to consider average. How do we find average? Opening plus closing divided by capital is found as opening plus closing divided by 2. How do we find opening? How do we find closing? What is the relationship? Opening capital plus profit earned during the year minus drawings is equal to closing capital. I'll repeat, opening capital plus profit earned during the year minus drawings is equal to closing capital. In the question, they have given one balance sheet. In this balance sheet, whatever capitals are there, this is closing capital. And we know drawings, we know profit. So opening profit, we do opening capital, I don't know. So that if I add profit and deduct drawings, I'll get closing. I'll work it backwards and find opening. Then I'll do opening plus closing by 2. There's also another method to do it. I'll show both the methods to you. So average capital employed is found as opening plus closing divided by 2. I know my closing capital, I don't know opening capital. Observe. Opening capital, which I don't know. To this, if I add, I don't know Sita, Geeta, Rita, none of their opening capital I know. To this, if I add current year profit and deduct the drawings made during the current year, I'll get my closing capital. Closing capital, Sita, Geeta, Rita. This I know. It's given in the question. 2 lakh 55, 9 lakh 45, 6 lakh 75. I'll write it 2 lakh 55, 9 lakh 45, 6 lakh 75. If I add all of them, I get 18 lakh 75,000. 18 lakh 75,000 is my closing capital. I don't know my opening capital. But I know profit earned during the year is 6 lakh, drawings made during the year is 4 lakh 50. So there is a number so that if I add 6 and deduct 4 lakh 50, I'll get 18 lakh 75. So instead, take 18 lakh 75, add 4 lakh 50 and deduct 6 lakh, you'll get opening capital as 17 lakh 25,000. This is found as balancing figure. If you want to check cross verify now, take 17 lakh 25,000 opening capital. So that you add 6 lakh, from that you deduct 4 lakh 50, you will end up getting 18 lakh 75,000. This is how closing capital is formed. And they've asked us to not take closing capital, but they've told opening plus closing divided by 2, average 17 lakh 25 plus 18 lakh 75 divided by 2. That's how I'll find my average. 1725 plus 1875 divided by 2. This gives me average capital employed of 18 lakh, which is 36 lakh divided by 2. This is one way of finding average capital. I can compute the entire average capital in a different way. See, average capital is capital in the middle of the year or capital on an average that's there during the year. I'll do opening less profit minus drawings to find closing, and opening plus closing divided by 2 will be average. Instead of taking opening, adding full profit, deducting full drawings to find closing, why don't I add half the year's profit, deduct half the year's drawing and find the average? So average can be found either as opening plus closing divided by 2 or opening capital plus half the year profit minus half the year drawings. In this question, we don't know opening, no? So using closing, how do we do it? Simple. From closing, deduct half year profit, add half year drawings. To opening, less half profit minus half drawings, or to closing, minus half profit plus half drawings will give you average. I'll show you how it works. I'll take closing capital of 18 lakh 75, what we know, that is 255 plus 945 plus 675 total. From this, I'll deduct half the year's profit. Current year profit is 6 lakh. I'll deduct half of it, 3 lakh. I'll add half of the drawings, which is 4 lakh 50 by 2, 2 lakh 25. This is how I'll get my average capital. Actually, this is not opening. Average capital employed is 18 lakh. So you can do one simple table like this, or you can do these two big tables, all to find average capital employed of 18 lakh. If your average capital employed is 18 lakh, normal profit can be found as average capital employed of 18 lakh multiplied by 30% NRR given in the question. Normally, based on the capital that I have employed, if I get 30% return like everybody in the market, like a normal person, I should make profit of 5 lakh 40. But I am actually making profit of 6 lakh. So over and above 5 lakh 40, I made a profit of 60,000. This 60,000 is my super profit. And I believe this extra profit, 60,000, more than others like 5 lakh 40, what I made as 6 lakh, the 60,000, I believe that I can make this extra profit for 5 more years. So 60,000 multiplied by 5, 3 lakh rupees of the profit that I'll earn in the future is because of my today's goodwill. So the goodwill of Rita, Geeta, Sita partnership firm is rupees 3 lakh based on super profit method at 5 years purchase, keeping 30% as NRR based on the average capital employed. This is how you should have got 3 lakh. And I'll scroll the answer bit by bit so that you can check if you already tried this. And then finally this. And this average capital employed, I also computed it like this. We'll now solve question number 13 from our RTP January 2026 for CA Foundation Accounting. This question number 13 is from the topic of partnership, the last unit in partnership, that is dissolution of partnership firm. Let's quickly begin. See what's happening here. A, B and C are partners. Very good. They're sharing profits and losses in the ratio of 2:2:1. 2 by 5, 2 by 5 and 1 by 5. They've given balance sheet before dissolution. Firm dissolved on 31st of March. That is the date on which the balance sheet is prepared. After preparing the balance sheet, it was discovered that purchases to the extent of 20,000 in March 2025, that is before the balance sheet date, are not recorded in books. This is clearly an error of omission. We have to debit purchase and then credit creditors. I need to increase my creditors. I need to increase my purchases. But purchases cannot be increased now because we're on the verge of dissolution. And that would have decreased our profit. Profit decrease is nothing but decrease in capital. So debit capital of the partners in their PSR and credit creditors to the extent of 20. This is rectification of errors after final accounts. So basically you would have written P&L adjustment to creditors, and later that P&L adjustment would be closed by transfer to capital. You learned this in rectification. I am doing the same thing in partnership. Then fixed assets realized value is given, stock realized value is given, debtors realized value is given, creditors were paid after deducting discount of 2%. There is a similar question in our ICA study module on the topic of dissolution, but there is a small variation in the answer. There was no adjustment with regard to this extra 20,000 creditors payment. But here, we'd have to pay that extra creditors 20,000. That's the answer given in RTP. Let's anyway stick to the same. Then the realization expenses amounted to 5,400. Okay, let's take care of that. Let's write that in realization account. And A took over Mrs. A's loan and B is insolvent and could not bring anything. Because B could not bring anything, A and C might have to compensate for B's loss in their capital ratio. That's Garner versus Murray. And they've asked us to do realization account, partners capital account and cash account applying the principles of G versus M, which means the partnership deed between A, B and C does not talk about how to handle insolvency of the partners. So we're applying Garner versus Murray. Let's start. पहले से शुरू करते हैं, शुरू से शुरू करते हैं. My God. Capitals. How much? A, B, C. 1,46,000, 54 and 50. These three I'll write in my partners capital account on the credit side. I've opened two partners capital account, one for rectifying that purchases, second one is rectified capital for closure purpose. So I'll write before rectification balance is 1,46,000, 54 and 50. Good. Then we have C's loan account of 25,000. C's loan, that is partner's loan, should be paid after we pay outside liabilities But before we pay partners, in my cash account, I'll write C's loan 25,000. I'm paying it right now, but actually the order of payment is not now. I would have to first pay outside liabilities, then I should pay partner's loan, then pay partner's capital. I'll anyways pay, so I've written it now. You can decide to write it not in your cash account and then remember to write it after you pay outside liabilities. Anyways, the ultimate treatment will come down to be the same thing. What do we have after this 25? Mrs. A's loan 50. We read no, Mrs. A's loan is taken over by Mr. A. So in my post rectification partner's capital, which I'll bring down here, I would write Mrs. A's loan of 50,000 as taken over by Mr. A, the partner. What do we have after this 50? Then we have sundry creditors to the extent of 1,25,000. Sundry creditors in my realization account, I would have to take it over because it's a liability. It has to be debited. Entry is creditors account debit to realization. In realization account, I'll write by sundry creditors 1,45,000. And Mrs. A loan I can skip or I can write it here and then I can also write that it is taken over by the partner. I can skip it completely or I can write it in realization account on the credit as liability to be closed by transfer to A's capital. Either ways, it's the same. What do we have after that? Then we have provision for bad debts 25,000. Close it by transfer to realization. Because it's a liability, it should be debited and realization account should be credited. Journal entries provision for bad debts account debit to realization. In realization, I'll write by provision for bad debts 25,000 rupees. What do we have after that? Fixed assets to the extent of 2 lakh. This has to be closed by crediting. Journal entry will be realization to fixed assets 2 lakh. And for stock, entry will be realization account debit to stock 1,25,000. For debtors, same again, realization account debit to debtors 1,25,000. And finally, for cash, entry will be in my cash account. I would write on the debit side to balance brought down 5,000 rupees. What do we have after that? Advance to B. So this is like the debit balance in partner B's capital account. I would write this as balance brought down on the debit side in the rectified partner's capital account with rectified balance, debit side 20,000 balance brought down. Then by this I'm done with the partner's capital as well as all the assets and liabilities from the balance sheet. Now we'll go to post balance sheet data. Firm is closing on 31st March. We are doing liquidation on 31st March. 20,000 purchases have been not recorded. We'd have to now make the entry. Purchase account should be debited. Creditors account should be credited. This is to the extent of 20. But already the balance sheet is prepared. Now I'm rectifying it post balance sheet. As the error is identified after final accounts, purchase account will be replaced with P&L adjustment account, which should be later transferred to capital. Instead, I'll write the entry as partner's capital account debit to creditors 2020. Which partner will you debit? All the partners' capital account in their profit sharing ratio. What is their PSR? We read it 2:2:1. So I'd have to do 2/5, 2/5, 1/5 for 20,000. It will be 20,000 into 2/5, 20,000 into 2/5, 20,000 into 1/5, which comes to be 8, 8, and 4. I've done the rectification to the capital. We'll get the revised capitals now. The revised capital after rectifying that purchase entry which was omitted will be 146 minus 8, 138, 54 minus 8, 46, 50 minus 4, 46. This will be balance carried down in the balance brought down in the post rectification partners capital account. I decreased my capital by recording creditors. Now I'd have to increase my creditors also, but I won't have to do that separately. When I pay them, I'll end up paying them slightly more. I hope you guys got that. Current lab sundry creditors was 125. I've already recorded 145. That is 125 of my sundry creditors plus 20,000 which was previously omitted, now recorded. So this is, I forgot to mention it some time ago. I hope you people understood. 1,20,000 from balance sheet, 25,000 now the increased sundry creditors balance because of recording that unrecorded purchase. That's how I have transferred 1,45,000 to my sundry creditors. Then what is the next item that we have? Fixed assets realized 1 lakh, stock realized 1,05,000, debtors realized 1,02,500. All these realizations is cash received. The journal entry will be cash account debit to realization. In my realization account, I'll end up writing buy cash or buy bank. How much did I realize from fixed assets? How much from stock? How much from debtors? Amounts are 1 lakh, 1 lakh 5 and 1 lakh 2,500. 1 lakh, 1 lakh 5 and 1 lakh 2,500. All three put together, it comes to 3 lakh 7,500 rupees. In my realization, I've written buy bank. In my bank account, I would write on the debit to realization fixed assets, stock and debtors. The 1 lakh rupees, 1 lakh 5 and 1 lakh 2,500. Put together, it is 3 lakh 7,500 rupees. What do we have after this? Creditors were paid after a deduction of 2% discount. So how much am I paying my creditors? My creditors as per balance sheet was 1 lakh 20. After recording that missed out purchase 25, my creditors have now become 1 lakh 45. When I'm supposed to pay them, I have been offered discount of 2%. So when I pay, the journal entry will be creditors to bank, which will now be recorded as realization to bank, which is 1 lakh 25 plus 20, which is 1 lakh 45 minus 2%, which is 1 lakh 42,100. In my realization, I've written to bank. In my bank or cash account, I'll write by realization, creditors paid 1 lakh 42,100. Change this as bank and cash account. Next, realization expenses amounting to 5,400 are paid. When you pay realization expense of 5,400, entry is expense to cash, but any expense arising in the process of realization will be debited to realization account. So the journal entry will be realization account debit to cash or bank. In realization account, I'll write to cash or bank, which is already written. I'll write once again. Realization expense 5,400. In realization account, if I write to bank, in cash or bank account, I'll write by realization expenses paid 5,400. What do we have after that? A agreed to take over the loan of Mrs. A, already done. B is insolvent and cannot contribute anything. So it should be borne by A and C. In what ratio? Not in the profit sharing ratio, but in the capital ratio, because we're applying Garner versus Murray, because the loss is not revenue loss, the loss is capital loss. What do we have after this? That's it. Everything else is done. All the assets, fixed assets, stock, debtors is sold. All the liabilities have been taken over or settled. Mrs. A's loan is taken over by A. Sundry creditors has been paid. Identify realization profit or loss. The total that I'll find here is more on the debit side. I would take 6,47,500, write the same on the credit and find realization loss as balancing figure, which comes to 1,20,000. This will be shared between A, B and C in 2:2:1 ratio. 1,20,000 into 2 by 5, 2 by 5, 1 by 5. Sorry, 1,20,000 into 2 by 5, 2 by 5. 1 by 5. This comes to be 48, 48 and 24,000 as my realization loss. In realization account, I have written by partners capital. In partners capital account, I will write to realization account 48, 48 and 24. This realization loss. Now, if you want to check, no, my A has a positive balance. C has a positive balance. There is still balance carried on. But if you look at B, B has advance of 20. He's taken advance of 20. He owes the firm. And there is loss of 48. 68,000 is the debits in his capital, but he has only 46,000 capital. B has to bring in money for A and C to withdraw. But B is saying, sorry boss, I don't have any money. I can't bring any. So there is deficiency in B. B had to get money, but is insolvent. His private estate is not sufficient to pay his private liabilities. How can you bring it to the firm? So B cannot bring money. When B doesn't bring, it is loss or deficiency of B to be borne by A and C, which is similar to the case of Garner versus Murray, the case law, where the judgment was that insolvency of the deficient partner or deficiency of the insolvent partner has to be borne by the solvent partners with credit balance in their capital account in the capital ratio. So let's do that. Now, before we do that, we'd have to first ask our solvent partners to bring their realization loss in cash. A will bring realization loss of 48,000 in cash. C will bring the realization loss of 24,000 in cash. In my partner's capital account, I've written by cash. In my cash account, I'll write to partners capital. Realization loss bought in cash by A and B, 72. And now the insolvency of B is 68 minus 46, which is 22. This will be borne by A and B. If A and C, B was supposed to bring in cash. If it would have bought in cash, there would have been no problem, because it doesn't bring. This is insolvency of B to be borne by A and C. So B's column is credited because B doesn't have to bring this much, and this 20,000 will be now debited to A and C in capital ratio, which is 138 divided by 138 plus 46. A's capital is 138, B's capital is 46. 138 plus 46 is 184. So I'll do 22,000 of deficiency of B multiplied by 138 divided by 184 gives me the share of deficiency to A because of B's insolvency, 16,500. Similarly, I'll do same 22,000 multiplied by C's capital of 46 divided by 184, and you get C's share of insolvency coming because of B's insolvency is 5,500, or C's share of B's insolvency 5,500. If you add 16,500 and 5,500, that comes to be total of 22. It's all done now. I need to find the closing balance in A and C's capital account now. Here I'll take the total 236 credit, 236 debit. Balance that should be paid in cash to partner A comes to be 1,71,500. Similarly, if you observe for C, it is 40, 20, 60, 70,000 minus 24 minus 5,500 comes to be 40,500. So 1,71,500 is to be paid in cash to partner A, and 40,500 should be paid in cash to partner C. In partner's capital account, I have written 2 cash. In cash or bank account, I'll write by partner's capital A and C. B won't pay C. This is 171,500. This is also C. How much is paid to A? 171,500. How much is paid to C? 4,500. Together we paid 2,12,000. And this should actually close my bank and cash account. If it does correctly, that means my preparation of dissolution is correct. 3,07,500 plus 5 plus 72,000 is 3,84,500. 25,000 plus 1,42,100 plus 5,400 plus 2,12,000 will also give me 3,84,500. And by this, I've successfully closed my cash and bank account. Observe, realization account, partner's capital account before rectification, partner's capital account post rectification, continued into my cash or bank account. Lastly, we have with us the adjustment of that transaction which was previously omitted. Let's now start with question number 14 from our RTP issued by the Institute for Jan 2026 examinations of CA Foundation Accounting. This question is on company accounts, the second unit, which is basically issue of shares with application allotment, calls in advance and all that. Let's start reading this. Green Rock Limited, that's the name of the company. It has an authorized capital, there is a maximum limit, nominal capital of rupees 4 crore in equity shares of rupees 10 each. This is ignored, okay? This is not part of your answer anywhere, unless they ask you to prepare notes to accounts of share capital. If they'll ask you to prepare notes to accounts of shareholders fund and share capital, then you will disclose this only. They've told of which 30 lakh rupees worth of shares have been issued and fully paid on 30th June. There's nothing that you would have to do about this. Ignore this. The company proposed to make further issue of 2,60,000 shares of rupees 10 each at a price of 12. So this is the key area which is concerned in this particular question. So we are right now issuing 2,60,000 equity shares of rupees 10 each at 12, which means 2 rupees premium on issue. 10 rupees nominal value, 2 rupees premium on issue. Make a note of that. So totally the nominal value of the shares is 10, premium on issue is 2, total price will become 12. That's the issue price. 2 rupees payable on application on 1st of July. On allotment which is made on 10th of July, we are collecting 5 rupees, which includes premium, and final call for the balance. So on application, I'm collecting 2 rupees with no premium. On allotment, we're collecting 5 rupees including premium. So 5 rupees on allotment. In that 2 rupees is premium. Nominal value is 3. Balance is on call. So out of 10 rupees per share, if I've collected out of 10 rupees per share, if I've collected 2 rupees on application, 3 rupees on allotment, my call will be 10 minus 2 minus 3, which is 5. Premium is 0. So I'm collecting 2 rupees on application, 5 rupees on allotment, including premium of 2, 5 rupees on call. Totally nominal value 10, premium 2, total 12. Further, how many shares am I calling for? Don't forget it's 2,60,000. They have mentioned that they've received 8,40,000 applications. Ooh, oversubscription. Applications called for are 2,60,000. Applications received are 8,40,000. Called for 2,60,000, received 8,40,000. There is clearly oversubscription. How are we handling oversubscription? 40,000 shares have received full allotment. So I would say full allotment. Applications 40,000, allotment 40,000. There is no refund, no rejection, no calls in advance. Then for 2 lakh share applications received, 1 share is allotted for every 2 applied. So for 2 shares they applied, I have allotted 1. Applications being 2 lakh. 1 for 2 allotment. If the applications are 2 lakh, allotment will be 2 lakh into 1 divided by 2, which makes it 1 lakh. And further they've told no money was returned to these applicants. The surplus was to be used for allotment. Surplus was used for allotment. So there is going to be calls in advance in this case. I was just checking if they've kept money till allotment and whatever is excess, are they refunding or are they keeping full money? They're keeping full money. So I was calling for 2,50,000 applications. I have received 8,40,000 applications. Out of them, for 40,000 applicants, I have given full 40,000 allotment. For 2 lakh applicants, I have allotted 1 lakh shares. So 1 lakh worth of application money is calls in advance to be adjusted against allotment money. Then third case, 6 lakh applicants have received an allotment of 1 share for every 5 shares held. So the allotment is 1 for every 5. 5 or 4? 1 for every 5. How many applications? 6 lakh. I'll do 6 lakh into 1 by 5. That comes to 1 lakh 20. For 6 lakh applicants, I have allotted only 1 lakh 20,000 shares. So they've paid a lot of money in advance, no? They're telling the money due on allotment was retained and excess is returned. So from these 6 lakh applicants, to whom I have allotted 1 lakh 20,000 shares, they paid 4 lakh 80,000 applications multiplied by application money. I will not keep the full money with me. I'll keep only 1,20,000 applications accepted into 5 rupees on allotment with me. Excess over and above that will be refunded. So in 1 for 5 category, there is calls in advance and also there is refund. So 6 lakh plus 2 lakh, 8 lakh, 8 lakh plus 40, 8 lakh 40 applications received. Allotment is 120 plus 1 lakh, 220, 220 plus 40, 260. We're done with the applications called for and applications received table. I can go to journal entries which they're asking us the money due on final call was received. So this part I can skip in the working note. But I have to you are required to record these transactions. Basically, I'm supposed to pass journal entries. Before I do journal entries, I will do a detailed working note at application stage and allotment stage as to how much is received, how much is called, how much is excess, how much is shortage, all that. The way I do this working note is slightly different from how the usually working note is presented in ICA study module. I'm doing this keeping in mind the presentation in the exam. When you're printing, you can reduce the font size, you can crush it, you can add an additional table. But when you're writing in the exam, you have to remember you write on pen and paper. You don't have unlimited paper width. You can't reduce the font size and you can't write the numbers in a tilted way, cross way and all that. So I write it in a way in which it looks very lengthy, but it will not take too much time. It's the same thing. Instead of presenting it horizontally, I'll write it vertically. And the language, I don't keep it more like a format. I don't keep it like mug up these 6 items. So I'll keep it more like common sense and logic. And I would strongly recommend you to do this, but if you have something better, you can do it. But I believe this to be the ideal way, which is foolproof, which reduces the possibility of making errors in the exam. That's my belief. You keep your belief with you, I'll keep mine with me. If you trust me, you can follow this. If you trust yourself, do well. All the best. Let's begin. To start with, how many applications were received? In full allotment category, we received 20,000 applications. Sorry, full allotment category, we received 40,000 applications. Each of them have paid 2 rupees. That becomes 80,000. And in 1 for 2 categories, we received 2 lakh applications. Into 2 will become 4 lakh. And 1 for 5 category, I have received 6 lakh applications into 2, which becomes 1 lakh. Everything put together, I have received 8 lakh 40,000 applications. I have received 8 lakh 40,000 multiplied by 2 per share, which comes to be 16 lakh 80,000. Out of this, how much money am I keeping? Application accepted. Out of this 40,000, I have accepted full 40,000. 40,000 into 2, 80,000 I will keep. Is there any excess which should be transferred to calls in advance? No, nothing. Is there any refund that I am supposed to make? No. However, in 1 for 2 category, they applied for 2 lakh shares and then paid 2 rupees, which became 4 lakh. But I accepted 1 lakh applications of rupees 2 each, which becomes 2 lakh. They were supposed to pay 2, but they've actually paid 4. 2 lakh whatever they paid extra. Am I going to refund them? No, it will be completely transferred to calls in advance. There is no refund. And in the third category, they paid 6 lakh applications into 2, 12 lakh. And out of that 6 lakh, I've accepted 1 lakh 20,000 applications. 1 lakh 20,000 into 2 is 2 lakh 40. Out of 1 lakh what they paid, I needed only 2 lakh 40. I have 9 lakh 60,000 rupees extra. Am I refunding it? Am I keeping in calls in advance? I'm doing both. Part of it is kept in calls in advance. Part of it is refunded. How much am I keeping in my calls in advance? I'm keeping my allotment money. Allotment money is 1 lakh 20,000 applications accepted into rupees 5 per share receivable on allotment, which becomes 6 lakh. From 12 lakh, if I had collected only 2 lakh 40 towards the shares accepted, 9 lakh 60,000 is extra. In that 9 lakh 60, 6 lakh I have kept it towards allotment. So 3 lakh 60 is the excess to be rejected and refunded. And that's it. I'll just write the totals here, horizontal. And these totals are the amounts against which I'll actually pass journal entry. My first journal entry will be bank to share application 16 lakh 80. Then I'll write share application account debit 16 lakh 80. 2. Share capital 5 lakh 20. 2. Calls in advance 8 lakh. 2. Bank account 3 lakh 60. Quite easy, right? So this working note might look lengthy, but if you are keeping an open mind and then seeing this is much better than the working note that you usually see, where just the numbers have been aligned and you would have to mug up format in a specific order. So received 1680, journal entry is bank to share application 1680. I would write my journal entry bank account debit to share application account 16 lakh 80 on 1st of July. And 16 lakh 80,000 share application account will be debited. I'll debit it. And I would credit my share capital. To what extent? To the extent of 5 lakh 20. I would credit calls in advance to the extent of 8 lakh. I'll credit bank account to the extent of 3 lakh 60. Observe the entry. 2 calls in advance, 2 bank. Accepted 5 lakh 20. Calls in advance 8 lakh. Bank account 3 lakh 60. 8 lakh, right? Yeah, 8 lakh. And 3 lakh 60. That's it. This is the entry for accepting the applications. Now I'll go to allotment. At the allotment stage, I'm supposed to ask for money from each of these. The money that I'm supposed to receive is from 40,000 applicants who have received full allotment. I'll ask them to pay 5 rupees per share, which is 2 rupees towards premium, 3 rupees towards nominal value. 40,000 into 5, 2 lakh. And from this 1 for 2 category, I'll ask them to pay 1 lakh share applications which are accepted into 5 lakh. And my 1 for 5 category, I'll ask them to pay 1 lakh 20,000 into 5, which is 6 lakh. Put together, I'm supposed to collect 13. I can't ask everyone to pay. Why? Because this 1 for 2 category and 1 for 5 category people have already paid in advance. But my first 2 lakh is there, no? Full allotment guy. He had not paid any advance last time. So he has to pay full cash money received on allotment, 2 lakh. However, 5 lakh, 1 for 2 category, this person had already paid advance of 2 lakh. So calls in advance available was 2. Calls in advance utilized is 2. I was supposed to receive 5 lakh from him. 2 lakh rupees I had received in the past, which I'll adjust. So I would have to collect only the balance of 3 lakh from this specific shareholder. Nextly, 1 for 5 category, I had to collect 6 lakh rupees from my shareholder, but entire 6 lakh is already available in calls in advance. I kept 6 lakh after computing what is needed in calls in advance only. Full 6 lakh of calls in advance I'll utilize. There is no money that I'll receive from him in cash. So totally I've utilized 8 lakh of calls in advance which was available, and I've collected 5 lakh rupees cash. Totally I had to collect 13 for allotment. I collected 5 lakh rupees cash. 8 lakh rupees I've utilized from calls in advance. The journal entry for making share allotment is share allotment account debit to share capital account 13 lakh. Then calls in advance account debit 8, bank account debit 5 to share allotment 13. There is no balance in calls in advance. Everything is utilized. I'll repeat, share allotment to share capital 13. No. I have to split this. There is premium here 3 and 2. So share allotment account debit 13 lakh to share capital 2 security premium. Then calls in advance account debit 8 lakh to bank account 5 lakh. Sorry, bank account debit, calls in advance account debit, 2 share allotment. It will be the case 8, 5 and 13. Let me write the entry. First I'll make the allotment. I'll write share allotment account debit. I'm supposed to collect 5 rupees for 1 lakh shares. 1 lakh is it? No, it is 2 lakh 60, which comes to 13 lakh. And in that, share capital is 2 lakh 60,000 shares into 3 rupees, 7 lakh 80. To security premium, 2 lakh 60,000 shares into 2. So I'd write here 2 lakh 60,000 shares into 2 per share. This is premium amount. This is the nominal value amount. This is the total amount receivable on allotment stage. I'm supposed to collect 13 lakh, in which 7 lakh 80,000 is towards capital, 5 lakh 20,000 is towards security premium. I would receive money, but not completely. 8 lakh rupees will be taken from my calls in advance, which I had previously created here. 5 lakh rupees worth of cash is received, and my share allotment of 13 lakh is sorted. And in the question they've told call was made and money is received. Call money is 5 rupees per share for 2 lakh 60,000 shares. So the entry is share call to share capital. Before that, interest on calls in advance is to be adjusted. This is something that I wanted to tell. In the RTP solution, they have not written this interest entry, but anyways, we'll still write. You would have to still write. You are expected to do so in the exam. If you observe, on 1st of July, you received the application money where calls in advance was created. This was adjusted against allotment which is made on 10th of July. So, share allotment money received in the form of calls in advance, 8 lakh rupees is received in advance by 10 days. For 10 days at 12% on 8 lakhs, interest has to be paid by the company. Interest is an expense. So, interest account debit to bank. It is 8 lakh rupees advance into 12% into 10 by 366. Why 366 and not 365? 2024 is a leap year. February will have 29 days. So they take 366. Interest comes to 2623. Interest expense debit, paid bank account credit. Then let's write that transfer of this interest to P&L. Entry will be P&L to interest on calls in advance. Transfer to PL 2623. Then final call. Share call to share capital. 2,60,000 shares into rupees 5 per share. Same. 13 lakh. Which is duly received. 13 lakh, 13 lakh. Share call to share capital. Last entry is bank to share call, 13 lakh, 13 lakh. Share call money received, and we are done with the accounting entries. I'll show it to you. This is our first working note wherein I've kept all the data that I need. Next, I've done the table for application and then allotment. Call, I'm not doing any table. Call is simple. I'm skipping the table for call because money was asked for, money was received. There is no advance also. Then accounting entry for application and calls in advance and refund. Accounting entry for allotment after utilizing advance money, accounting entry for final call, and the interest part. Let's now start solving question number 15 from our January 2026 RTP of CA Foundation Accounting. This question number 15 is from company accounts, but not the issue unit. This is third unit, which is forfeiture and reissue. Because the shareholder did not pay the money in time. We've given him time, we've given him warning. In spite of that, because he did not pay, we forfeited his share and we've reissued it to somebody. Let's do the accounting for the same. Windy Vale Limited forfeited 900 shares of rupees 10 each, fully called up, held by Varun for non-payment of allotment money of 3 and final call of 4. See this. The shareholder's name is Varun. He holds 900 shares. Share is fully called to the extent of rupees 10. I called for money. He did not pay allotment of 3 rupees. He did not pay final call of 4 rupees. So 3 plus 4, 7 rupees is what he has not paid. The share is 10. In that, if he doesn't pay 7, what he has paid is 3. So 3 rupees was received. 7 rupees is not received. I gave Varun warning. I gave Varun time. I gave Varun notice. Varun did not respond. I forfeited the share. When I forfeited the share capital will decrease. So share capital account will be debited. And the forfeiture is with regard to how many shares? 900 shares. My capital is decreasing to the extent of 900 shares into rupees 10 per share, 9,000. And against this specific shareholder, I had made the call for allotment of 3 and final call of 4, which he did not pay. I had written it as calls in arrears, which is my asset. When I forfeit the share, I can no longer ask him for money. So this 7 rupees will no longer be received. When I made the call, he did not pay. I recorded it as an asset debit. Now this 7 rupees has to be credited. Calls in arrears for 900 shares, 7 rupees, 6,300. Out of 10, if he has not paid 7, is paid application money of 3. When I forfeit his share, I won't return that 3 rupees back to him. That 3 rupees, what I won't return back to the shareholder on forfeiture, will be transferred to a temporary account called share forfeiture. On reissue of this shares forfeited, if it turns out to be profit, it will be transferred to capital reserve. So I'll write money received from the shareholder in the past, which will be forfeited and not returned or not refunded back to the shareholder, is 900 into 3, 2,700. By this, I have finished forfeiture of the shares from Varun for non-payment of allotment and call money. What's next? These shares were reissued to Nitish at rupees 8 per share. I gave the shares back to Nitish at 8. I was supposed to originally collect 10. Now I'm collecting 8. 2 rupees what I won't collect is discount. Share is of 10. I'm reissuing it to Nitish and collecting 8. 2 rupees what I won't collect from Nitish will become discount. Such a discount on reissue of forfeited shares should be adjusted against the same share forfeiture balance that we created in the past. Let me write the entry. Bank account debit. 900 shares were forfeited. I am reissuing all the shares. 900 into 8. That becomes 7,200. I'll credit my share capital. 900 shares will be fully paid up to the extent of 10, making it 9,000. So 7,200 rupees cash received. 9,000 rupees is increase in share capital. 1,800. The extent to which I have made the call, but I won't receive. That is 2 rupees discount per share for 900 shares. Discount on reissue of forfeited shares will be adjusted against share forfeiture account. Any excess balance remaining in share forfeiture account will be profit to be transferred to capital reserve as all the shares have been reissued. Observe, we had balance of 2,700 in our share forfeiture account. Of that, 1,800 rupees worth of balance is being utilized. 2,700 minus 1,800 will give us 900 rupees of money, which will be transferred from share forfeiture to capital reserve. I'll teach you how alternatively you can compute the same 900 in a different way. Varun, our old shareholder, had paid rupees 3 and Nitish, our new shareholder, paid rupees 8. Varun paid 3, Nitish paid 8. 8 plus 3. Together I have collected 11 rupees. When I have collected 11 rupees, The nominal value of the share is actually 10. I've collected 1 rupee extra. That 1 rupee that I've collected more is profit. 1 rupee is per share. For 900 shares, it is 900. I'll repeat. 3 rupees, Varun has paid. 8 rupees, Nitish has paid. 3 plus 8, 11. Nominal value 10. Profit on reissue of share 1 per share. Multiplied by 900 shares, 900 rupees. You can do it slightly differently. Now, Varun had paid 3. So I can offer discount of 3 rupees to Nitish. Varun had paid us 3 rupees. I can offer discount of 3 rupees to Nitish. But I offered only 2 rupees as discount. Out of 3 rupees, which is maximum discount, I offered only 2. 1 rupee discount that I did not offer will become profit multiplied by 900 shares, and that becomes profit on reissue of forfeited shares to be transferred to capital reserve. By this, we're done with 15 sub-question 1. But 15 had 2 sub-questions. Let's solve the second one. What's happening in the second one? A Limited forfeited 200 shares of rupees 10 each. 7 called up. So the moment it is 7 called up, remember you would have to ignore 10. 10 is of no use. So 200 shares of rupees 7, on which Kamal had paid application and allotment money of 5. 5 rupees is received. When you forfeit this, your share capital will decrease not for 10 rupees, but it will decrease for 7. Share capital account debit will be 200 into 7, 1400. And out of 7, he has paid 5. So he's not paid 2. 2 rupees what Kamal did not pay. We had debited it to calls in arrears as our asset. Now that asset will no longer exist. I can no longer ask him money because I've already forfeited the share. I'll credit calls in arrears 200 into 2, 400. And the money that he had paid was 5 on application and allotment, 5 rupees per share for 200 shares. 1000 rupees whatever I had collected in the past is not of the money which I'm refunding back to him. Money which I collected, which I'm not refunding on forfeiture, is like profit to be credited to share forfeiture account. So the journal entry is share capital account debit 1400, to calls in arrears 400, to share forfeiture 1000. By this I am done with share capital, 2 calls in arrears, 2 share forfeiture. Then I am reissuing it, but this is slightly unique from the previous case. In the previous case, we reissued all the shares. In this case, we are reissuing only 150 shares. We had forfeited 200. We are reissuing 150 shares. 150 shares are reissued at rupees 6. Write the entry. Bank account debit 150 into 6 becomes 900. These shares have been reissued with fully paid up or partly paid up. As fully paid up, meaning share capital account credit will be 150 shares into 10, not 7, 1500. When I reissued shares of nominal value 1500, I was supposed to collect 1500, but I collected only 900. 600 rupees what I did not collect will become discount on reissue to be debited to share forfeiture account. Now I need to compute the profit to be transferred to capital reserve. Remember, don't do 1000 minus 600, 400. It will give you wrong answer because you forfeited 200 shares, you reissued only 150. So your forfeiture balance is 200 shares into 5. Am I right? So in this, only 150 are reissued. Take 150 into 5. How much is 150 into 5? That is 750 rupees was collected previously against 150 shares, which are now forfeited and reissued, but the money was not refunded. Out of this 150, 600 of share forfeiture is utilized. 150 rupees has to be transferred from share forfeiture to capital reserve. If it doesn't make sense, I'll teach you in 2 more ways. Focus. Old shareholder had paid 5. He did not pay 2. So old shareholder paid us 5. New shareholder paid us 6. Old shareholder paid 5. New shareholder paid 6. 5 plus 6. I've collected 11 rupees. Whereas the nominal value of the share is 10. 1 rupee that I've collected extra will become profit. On how many shares? 150 shares. Don't take it on 200 because only 150 shares are reissued. 150 shares into 1 is 150. That's the profit on reissue to be transferred to capital reserve. One method. Another method. Previously, we received 2 rupees on the shares which were forfeited, which we did not refund. So 2 rupees we have received from the old shareholder. sorry. 5 rupees we have received from the old shareholder, which we did not refund. So 5 is the maximum discount that I can offer on reissue. For a 10 rupee share, I collected 6, which means I gave discount of 4. Maximum discount that I could have offered 5. Discount I offered 4. So out of 5, if I deduct 4, 1 rupee discount which I did not give will become profit. Multiply this not with 200 shares, but with 150 shares which are reissued. 150 shares into 1 will become 150 rupees as profit on reissue of forfeited shares. Our 15.1 is done. 15.2 is also done on forfeiture and reissue. Let's now start with question number 16 from our RTP Jan 2026 issued by ICAI for CA Foundation Accounting. This question number 16 is from the topic of issue and redemption of debentures. We don't have much of debentures issue here. We're basically dealing with how to convert debentures partly to cash and partly to equity shares. That is redemption of debentures partly by settlement in cash and partly by conversion into equity shares. Purely from the topic of redemption of debentures. Let's start. A company had issued, already issue is done, 80,000 12% debentures of rupees 100 each on 1st of April 2021. The debentures were due for redemption on 1st of March 2025. The terms of issue of debentures provided that they were redeemable at premium of 5%. So, these debentures who have nominal value 100, on redemption, I can't pay them 100. I am forced to pay them 105. The company offered an option to debenture holders to convert. It's an option given. If a debenture opts for it, he'll be given equity share in the place of debenture. If he says, no, I want cash, we will give them cash. It's a small trick. To convert redeemable value 20% of their holding of the equity shares. Holding to equity shares. Meaning, if I opt, I won't get 100% of my holding in debentures into equity shares. The conversion is not 100%. If I opt, then 20% of my holding will become equity shares. 80% will still be settled in cash only. And nominal value of equity shares is 10 at a predetermined issue price of 15. So it will be settled at, the equity shares will be issued to settle debentures at a price of 15, 1, 5. And payment in cash for remaining debentures. Okay. 100 debenture holders holding totally 10,000 debentures did not exercise the option. Oh, they don't want equity shares. They want cash. They want us to compute the total equity shares allotted and total cash paid. They have not asked accounting entries, but we have done this in the class. In these kind of questions, they can actually ask you to pass journal entries also. To begin with, we have 80,000 convertible debentures of rupees 100 each, which comes to 80 lakh. We have told our debenture holders, if you want, I will give you equity shares. If not, I'll give you cash. If you want equity shares, and I'll not give you full equity shares, I'll give only 80% equity shares, sorry, 20% equity shares. 80% settlement will anyways happen by cash. In this, one debenture holder who's holding 10,000 debentures opted for cash. 10,000 debentures, each debenture is 100, can I say 10 lakh rupees? This 10 lakh rupees is settled by issue of cash. And when we say cash, we have to remember nominal value of debentures is 10 lakh. We have to pay them premium on redemption. That's been told in the question. Redemption happens at a premium of 5%. So how much is 5% of 10 lakh? That comes to be 50,000. I need to pay them 10 lakh 50,000 by cash. This is pure cash. Out of 80,000 convertible debentures, if 10,000 debenture holders expect cash completely, 70,000 debentures have opted for conversion. Debenture holders holding 70,000 debentures of 100 each, which totals to rupees 70 lakh, have opted for conversion of debentures into equity shares. But we won't give full 70,000 debentures worth of equity shares to them. Only 20%. Observe this. Convertible portion is 20%. Can I say 20% of 70,000 debentures is 14,000 debentures? Against 14,000 debentures, each of it being 100, it comes to 14 lakh. I will give equity shares. And against the balance 80%, that is 70 minus 14,000, 56,000, or 70,000 into 80%, which is 56,000 debentures of rupees 100 each, coming up to 56 lakh rupees. I'll give them cash. Remember, 56 lakh is again nominal value only. On this, I'm supposed to pay them premium of 5 per debenture or 5%, which comes to 2 lakh 80. I end up paying 58,80,000 redemption value in cash to those debenture holders who opt for conversion. This is because even if the debenture holder opts for conversion, not the entire percent of his holding is converted into equity shares. Only 20% is converted to equity shares. Balance 80% has to be and will be settled by cash. We are done with this. This is cash paid 58 lakh 80, cash paid 10 lakh 50. Here, the nominal value comes to 14 lakh. On redemption, we have to pay premium 5%. I'll add that 5%, 70,000, making it 14 lakh 70,000 as redemption value. If I was giving cash, I would have given 14 lakh 70. I'm issuing equity shares to them. When I issue them equity shares, each equity share is of 10, but it is issued at 15. So to identify number of equity shares issued, I need to divide 14 lakh 70,000 by issue price of 15. 14 lakh 70,000 divided by issue price of 15 gives us 98,000 shares. So can I say number of equity shares issued is 98,000. We are basically issuing 98,000 equity shares of rupees 10 each at a premium of 5, making it 14 lakh 70,000 worth of debentures being converted to equity shares. There is premium on redemption. There is also premium on issue of equity shares. The actual answer ends here, but I will go forward to prepare journal entries for the same. To do this now, I'll write that we have issued 98,000 equity shares of rupees 10 each at a premium of 5, making it 14 lakh 70. And we've also given cash. How much cash? 58 lakh 80 and 10 lakh 50 together. Together we paid cash of 69 lakh 30,000. And this is how the settlement has happened. Let's write the entries. Debenture nominal value 80 lakh is reducing. I'll debit 12% convertible debenture by 80 lakh. And to these debenture holders, I'm also supposed to pay a premium. I'll compute on 80 lakh 5% and I'll debit it. 4 lakh of premium I need to pay. So basically, I am supposed to pay my debenture holder 84 lakh. 80 lakh nominal value towards their debentures, 4 lakh premium. I'm supposed to pay them 84 lakh. However, on the payment, I'll debit debenture holder by 84 lakh. Not everyone is paid by cash. Not everyone is settled by equity of issue of equity shares. Partly cash, partly issue of equity share, and issue of equity share along with premium. So my credit will be cash account, equity share capital account, as well as security premium. Let me credit cash or bank account. I am paying cash of 69 lakh 30,000. Let me write that. To equity share capital account, I am issuing 98,000 shares. Don't write 1470 because 1470 includes premium. I am issuing 98,000 shares of rupees 10 each. That comes to 9 lakh 80. And same shares are issued at premium. 4 lakh 90 will be returned to security premium. And that's the end of the accounting entries for redemption of debentures by way of conversion and partly settlement in cash. Let's now start solving question number 17 from our RTP Jan 2026. This question is on redemption of preference shares, company accounts unit. Let's start reading the question. The following balances appeared in the books of Silverstone Limited. That's the name of the company. They've given us preference shares. If you have a look, 10% preference shares of the company are of nominal value 100 each, but these preference shares are paid up only to the extent of 75. I know it, you know it, we all know it that we can never redeem preference shares if they are partly paid up. To do redemption, the shares have to be fully paid up. If they're already fully paid up, we'll proceed with redemption. If they've not been fully paid up, we have to make the call for the balance 25, receive that money. Only and only if the 25 rupees is received, we will proceed to redeem the preference shares. Otherwise, I'm sorry. We can do forfeiture, but we can't do redemption. Let's continue. Under the terms of their issue, preference shares are redeemable on 31st March at a premium of 5%. Let's provide for the same. And this premium payable on preference shares cannot be taken from security premium. It has to be from profit. You can take P&L account. In the question, they've not given P&L, they've given general reserve, debit general reserve. In order to finance the redemption, company is making right issue. Okay. Company is issuing 1,20,000 equity shares of rupees 100 each at a premium of 10%. 25 on application, 45 on allotment. Let's proceed with this. What you have to remember is if the complete funding of the redemption of preference shares had come from pocket, that is on sale of investments or on the cash that we have, then we have to create CRR to the full value of nominal value of preference shares redeemed. But in this case, to the extent equity share capital is increasing by issue of shares, I don't have to create CRR. The extent to which preference share capital is decreasing, which is not compensated by equity shares issued, for that difference, I have to create CRR, and CRR will be created using general reserve. Then allotment dates have been given. Preference shares have been redeemed after fulfilling necessary conditions. So first we'll make the call, receive the call money, then pass the preference share capital redemption due entry by transferring it to preference share holder, including premium. Then I'll make right issue, application allotment, and then call. I'll receive the right shares money, and then I'll pay to my preference shareholders. I'll also adjust my premium on redemption with general reserve, and finally create CRR for the difference between capitals. And I think that's it. They've asked you to prepare journals, and they also want you to prepare notes to accounts for share capital and reserves and surplus. Why waste time? Let's begin. To begin with, when you make the call, entry will be preference share call account because you're supposed to receive money there, and credit preference share capital. It is 10% preference share capital being share call made. How much? You're making call to the extent of 25 rupees per share for 16 lakh shares. Very good. Let's write 16 lakh shares. 16 lakh shares into rupees 25 per share. This is the extent which we're making the call, which comes to 40 lakh. Am I right? Let's just check. Yeah, 40 lakh. That's absolutely perfect. Then I would receive this money. I'll write bank account debit to preference share final call. 40 lakh, 40 lakh. I've made the call. I've received the money. Now my preference shares are due for redemption. It is 10% preference share capital that will be debited at its full value. That is 16 lakh shares into rupees 100, which comes to 1 crore 60 lakh. But what I'm supposed to pay my preference shareholder is not limited to 1 crore 60 lakh. I might have to pay them slightly more for the premium. So I'll debit premium on redemption of preference shares account also debit. This is to the extent of 5%. 1 crore 60 lakh into 5%, 8 lakh. Basically, I need to pay my preference shareholder 1 crore 68 lakh. And how do I pay this? By cash. But to pay, I made right issue. I cannot write payment entry now. First, I would have to issue right shares and collect the money. Only then such money will be used to pay my preference shareholder. Right issue is happening like this. 1,20,000 shares of rupees 100 each. Premium 10%. So basically, issue price is 110. 25 rupees being payable on application. So I'll write the entry bank account debit to equity share application. I have collected for 1,20,000 applications into rupees 25. So let me write 1,20,000 shares into rupees 25 per share. This comes to be 30 lakh. And once I write 1 crore, 1,20,000 into 25, 30 lakh, 30 lakh. This application money I'll transfer it to my share capital by rating equity share application account debit to equity share capital 30 lakh, 30 lakh. Then I'll make allotment. At allotment stage, I'm supposed to collect 45, and that 45 will include premium. How much premium? 10 rupees. Because nominal value is 100 and premium is 10%. I'll write the entry equity share allotment account debit. That's for the money receivable. On 1,20,000 shares, I'm supposed to receive 45 per share, which comes to be 54 lakh. Out of this 54 lakh, portion of this will go to equity share capital. A portion of this will go to security premium. How much will go to equity share capital? On 1,20,000 shares, will transfer 10 rupees to security premium, and other than 10 rupees, whatever is there is towards my capital. So 12 lakh rupees will go towards my security premium, and balance 35 rupees will go towards my share capital. This is allotment made, money due yet to be received. They've told it is received. So I'll make the entry for receipt as bank account debit to share allotment account. This is to the extent of 54 lakh. Now application money received, allotment made, allotment money also received. Now let's proceed with preference shareholder payment. We wrote it just 2 entries ago that I need to pay my preference shareholder 1 crore 68 lakh. Now that I've made right issue, I have enough money. I'll pay preference shareholder by debiting preference shareholder account 1 crore 68 lakh. It's a liability decreasing debited, and I'll credit bank account because the money is paid and my capital is decreasing. My cash is decreasing. After the payment to preference shareholder, I need to do 2 things. One, I need to write off this premium on redemption of preference shares. What was debited? 8 lakh. By debiting my general reserve. I'll write general reserve to premium on redemption 8 lakh, 8 lakh. Done. Last entry, capital redemption reserve. That is supposed to be created under section 69, subsection 1 to ensure that the overall capital of the company cannot go down, irrespective of the fact whether you do redemption or buyback. Redemption, as in what you read in your CA Foundation. Buyback, what you will read in CA Intermediate. We'll be waiting to see you there. Anyways, come here. Your equity share capital is increasing by 30 lakh and 42 lakh. I have credited it 2 times, 30 and 42. Equity share capital is increasing by 72 lakh rupees. 30 on application, 42 on allotment. And preference share capital is decreasing by 1 crore 60 lakh. And 1 crore 60 lakh minus 72 lakh. The difference will come down to 88 lakh. That is the extent to which I will create my capital redemption reserve. That's the extent to which my capital is reducing because of redemption of preference shares, which is not compensated by issue of equity shares. So capital of the company cannot reduce otherwise than by reduction, which is given in internal reconstruction, which is a chapter in CA Inter. So for this reduction in my capital, I'll create CRR, which will be later used for bonus issue, which will increase my capital back to the original limit. And this is it. By this, we're done with journal entries. However, they've asked us to do notes to accounts also. To begin with authorized capital, which I have no clue about, I'll just leave it blank. Then I'll write issued share capital. I've issued right shares just now. And before that, have they given us any equity? Yeah, we have 4 lakh equity shares of rupees 100 each. I would write that exactly the same way. 4 lakh equity shares of rupees 100 each, 4 crore, same to same. We issued 1,20,000 right shares of rupees 100. I've collected 25 on application. I've collected 45 on allotment. In the 10 is premium. So I've collected 35. 35 plus 25, I've collected 60 rupees. So I would write 1,20,000 shares have been issued on rights, which is equity shares, of rupees 100, but only 60 rupees is paid up. 72 lakh, 4 crore 72 lakh is the equity share capital. In the notes to accounts given in the question, there is preference share capital, but this has been redeemed, which will no longer exist. So this is done. Now going to reserves and surplus. To begin with, security premium 13 lakh. I have security premium 13. I'll write it in the inner column. During the year, when I issued my equity shares, I've issued them at premium of 12 lakh. I'll consider that 12. I'll add that 12 lakh to this, make this 25 lakh. So during the year, equity shares which were issued as rights have been issued at premium. That will increase my security premium. After security premium, I have with me capital redemption reserve, which was there to the extent of 84 lakh. But during the year, on redemption of preference shares, because the capital was dipping much more than increase, I have created CRR to the extent of 88 lakh. I will add this. As I add CRR created 88 lakh and make my CRR as 1 crore 72 lakh, I want you to remember, next when I write general reserve, I have to deduct this same 88 lakh. Because CRR is created out of free reserves. I take it from free reserve, put it to CRR. CRR will increase, general reserve will decrease. Next item that we have is general reserve to the extent of 1 crore 70 lakh. Very good. Out of this 1 crore 70 lakh, there are two things that's happening. Number one, my general reserve is decreasing for premium paid on redemption of preference shares, which if P&L was there, I would have deducted there. Secondly, it will also reduce for CRR that's created. 8 lakh is premium paid and 88 lakh is CRR created. If I deduct both, I'll arrive at 74 lakh. Total of this will be 2 crore 71 lakh. And this is the notes to accounts that I prepare for share capital followed by reserves and surplus as asked in the question. Now we're going to discuss question number 18 from our Jan 26 RTP. This is on short note question. My humble request to all of you preparing for your examination is not to skip short note questions. In fact, this is something that can save your attempt if in case the exam turns out to be terrible for you in those 3 hours. What you got to do is, in all the 11 chapters, pick 2-3 topics from where short note question is possible. You can definitely do this. When you pick all these topics, put together, it will come to 23, 24 topics. And on each of these 23, 24 topics, write 4-5 line summary and read them through and go to the exam. If in case the paper turns out to be lengthy, or you get stuck in any question, or the adjustment turns out to be very new which you don't know, then leave that question, take up these short notes, and then write those 3-4 short notes questions where scoring 4 on 4 might not be possible. Scoring 3 on 4 becomes very easy. And this might just save you an attempt and also ensure that you get into CA Inter pretty quick. On that note, let's start with question number 18. Short notes questions. Rules for posting journal entries into ledger. Simple rule to remember. For every account involved in the journal entry, we need to open a separate ledger. And items, when they're represented in the ledger, we need to use two beautiful words. One, to, by. One, TO2. Second word is BY by. When you're writing items on the debit side in the ledger, you would have to use the word to, which is actually credit in the journal entry. In the credit side of the ledger, you will write all the debit items in the journal entry that will be represented by. And you need to remember, in a journal entry, the debit aspect, whatever is there, in that ledger, the credit item will appear on the debit side. And for the credit item in the journal entry, when you open ledger, that debit aspect will appear on the credit side in that ledger. That's it. You follow these 3 rules and 4 marks is yours. Next one, importance of bank reconciliation system to an industrial unit. They keep depositing checks, they keep issuing checks, they keep making standing instructions. They might have incurred a lot of banking charges, they might have collected money, the bank might have collected money on your behalf, customers might have directly deposited, so many transactions would have happened. There is a very good possibility of some transactions being omitted or incorrectly recorded in cash book. Only way we can identify this is by preparing bank reconciliation statement. By comparing your passbook with cash book, to identify such transactions which have been incorrectly recorded or omitted to be recorded, so that you can correct them to show the correct bank balance in your balance sheet. We can summarize it and write it a little long. That will be the answer. Periodic inventory system versus perpetual inventory system. When a proper accounting record is kept for every unit received, every unit issued, how many units are there in the godown, can be told without opening the shutter of the godown, just by looking at the paper. That's perpetual inventory system, where every transaction of inventory coming in, going out will be recorded. If in case you count the inventory in the godown, you can verify whether it matches with the records. If it doesn't, then we can find the reason why it's missing. That's under perpetual. Under periodic, we don't do this. The day I want to know how much inventory is there in my godown, I go count it physically. Or what do? I look at my cash book and creditors account, identify how much payments are made to be made to find my purchase. Or look at invoices. I'll identify my sales by looking at my cash account, cash received, and debtors account receivable, or my sales invoices generated. I know opening inventory at the beginning of the year because I know the previous year's closing inventory. I know the profit margin, so I'll apply COGS formula to find out my closing stock. And that's periodic system. Under periodic system, there is no control. If inventory is stolen, if inventory is lost by fire, if inventory is pilfered, if there is any error done, you won't be able to catch it. You believe the inventory that's there in the godown is the right value. So, periodic inventory system is suitable where the quantity of the inventory is so huge that you can't maintain records. Whenever you can maintain records, you should follow perpetual system that's reliable, scientific, trustworthy, and gives you information comprehensively, which can be re-verified with the physical inventory. But all this is not available in periodic inventory system. However, read it in detail from your class notes so that you get a better edge in the exam. Then, trade bill versus accommodation bill. This is from bills of exchange. I have sold goods to you, you have sold goods to me, I've raised a bill on you, you signed it, accepted it, you give it back to me, then it's a trade bill. There is a trade, purchase, sale, transaction, what has happened between two parties, and to settle the dues between both the parties, there is a bill. That is trade bill. What is accommodation of a bill? I have not sold goods to anything. You have not sold goods to me. We don't owe money to each other, but we both want money. So we will act like I've sold goods to you. You have purchased goods from me. I will raise an invoice. You will assume that you have purchased goods from me and you sign that bill and then give it back to me as if there is a trade transaction between us. But genuinely speaking, there is no trade between us. You sign that bill and send it back to me. I take that bill, discount it with the banker only to share the discounting proceeds with you. And on the maturity date when the banker comes back, you pay the money to the banker You never tell the banker that we did not have trade between. And whatever money you're supposed to pay to the banker, a part of it I'll contribute. So basically, it's a financial arrangement. Trade bill is backed by a genuine purchase sale trade transaction. Accommodation of a bill is a financial arrangement between two parties wherein they pretend that they have trade, raise a bill, and then accept the bill, discount it to share the proceeds. Where in reality, there is no such trade transaction between them. Next one, we have contingent asset and contingent liability. These are not assets, not liabilities, but these are potential assets and potential liabilities. To start with contingent liability, it is a obligation which might or might not materialize. It is dependent upon occurrence or non-occurrence of one or more future events which are uncertain, uncontrollable, and not in our control, and we are not very sure of it. Same thing, whereas contingent asset is dependent upon occurrence or non-occurrence of one or more future events, and this contingent asset, if the ruling is in our favor, it results in inflow of cash. Contingent liability, if the ruling is in their favor, actually it results in outflow of cash. If you expect to receive the money on happening of a certain event, it is asset. If you expect to pay the money on happening of a certain event, that ends up being contingent liability. I've tried my best adding a lot of value to your preparation by discussing this RTP in detail. I cannot promise you that these RTP questions come in the examination. That's the reason I didn't just go through answer or just tell to the point answer. I've discussed it in detail and I've told you every concept that can come around it, because I believe that you deserve everything and nothing less, and you deserve to clear the examination whenever you're writing up next. So we'll wait very eagerly to see you all in CA Inter. Till then, stay in the game, and before you go away, let me know in the comments if this was helpful, or let me know if you need any other topic video from CA Foundation or Inter.